Hello. Hello. Good morning. Good morning. All right. Good morning, everyone. Good morning. My name is Joseph Okwakunle. I'm co-convener for this MSME Tax Clinic. It's very nice to have you all here, and we'll be starting in the next 10, 15 minutes. We apologize for the delay, but don't worry, we are very time conscious. 2 hours max, and we are done with the program, right? Thank you very much for your understanding.
Thank you very much all for coming. To actually save time, I am volunteering to be their MC, and I'll start with introducing myself. My name is Nora Gunsanya. I'm a lawyer, and I have always wanted to know how to pay tax, learn more about withholding tax, and maybe try to evade tax. That's my that's my daughter right there. Her name is Testimony. So I'll be moving on to the handsome man in blue to tell me his name.
All right. Good morning. My name is Enobong Kobo. I'm a product manager at a IT firm. We deal with IT solutions, basically, right? So I'm currently in the development of an invoicing platform, right, that can help with, can contribute to this session. That's
Thank you so much, Enobong. We'll learn more about your IT.
Morning, everyone. My name is Jide Ipadiola. Also work with an IT firm, same company Enobon comes from. Basically, software development, solutions making, social making, and all of that. Yeah, that's it. Max Front Technologies.
Know more about you. Thank you. So I'm going on to this beautiful woman. She was the first person to come, and I almost want to ask her, "Are you Diadem's mother?"
Good morning, everyone. I know Diadem. Really? She will explain. My name is Remy Enison. I'm the managing director of Happy Boarding School. So I basically run a school and, like you, very, very interested in the usual filing because they keep writing me. And, it's better to comply than to be chased. So that's why I'm here. Accumulation and penalty. Thank you so much. Happy Boarding School at Ogunfayo in towards Awoyaya. Okay.
Thank you so much, ma'am. My name is Ayokunle Enison. I am into real estate and I'm a sports administrator. I have administrator. I have a football academy. We promote sports and entertainment. So I want to know how to file my tax, how to go about my tax issues. Thank you.
We're all here to learn. I'm going to my guy. I know his name. His name is Mr. Busaya Layade.
All right. Good morning, everyone. So, I am Oluwabusi Ayomilayade. I work in a consulting audit firm, and on the side, my wife runs and I support her an events and catering company. And just want to, now that taxes have changed, so I would say I know a little bit about taxes, but now that things have changed with the new laws, it's good to hear it from those who actually practice it or do more with it every day. So that's why I'm here. Thank you, ma'am.
So I'm going on to this beautiful lady who just tucked herself in a corner. After the introduction, we'll now move forward to the center because when the chin is coming, he's just at the front, I'll get more.
All right. Good morning, sir. Good morning, ma. My name is Efe Adeze. I came all the way from Akoka. Wow. Yes, because of Mrs. Remy. Yeah, she posted on our platform, and I just came back yesterday, so I was like, okay, let me come and learn a little bit from you guys today. So I'm an educator and a researcher. I work at Queen's College and University of Lagos. I also run my own business, so that's one of the reasons why I'm here. I'm also a global schools advocate and blah, 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 blah. Thank you.
Thank you very much for coming. Thank you very much for coming. Welcome, Mr. Olu Joshua. We're just about asking about you now that you're here. I'm going to fill you up. So we're introducing ourselves, our businesses, what we do, and of course, how we heard about this, and also what we intend to do in terms of contribution. So my name is Nora, like you already know. Okay.
Thank you very much. Okay. My name is Isaac Olu Joshua. I run an SME boutique or thriving, as I like to call it, accounting and tax advisory firm. Means that we help small businesses keep their books, file their tax returns, get them compliant, and get them positioned to scale up. I've been a member of the Covenant Nation, so obviously they've been announcing in church, so that got me aware of the program. Interestingly, I'll be one of the people also speaking today, so that'll be my contribution. Thanks.
Thank you very much. So I'm actually volunteering. Whenever you're ready, you can come up. I'm just volunteering, so we don't just sit around and just look at each other. If you don't mind, can we move forward a little so that we can actually have a tete-a-tete, while we wait for the organizers of the program to come up. One of the reasons why I came for this program was because I am very laid back with bookkeeping. Very, very laid back with bookkeeping. I don't know how many of us are in that shoes. Like, I run Nora Sonia Press, I write books. I run Nora Sonia & Co. I'm a lawyer. I run Nora Bay Homes. I'm a real estate agent, even though now because I'm juggling so many balls, I can't do a lot of them efficiently. I also had Benor schools, which I had to close down. I had a school, I had to close it down because I didn't have that time to do it efficiently. But in all of this, where are my records? I'm sorry, I'm ashamed, I have none. I don't have a record. So when I saw bookkeeping, I told them, see this bookkeeping, I want to learn about it because I want to be able to, even though I closed down the school, I should be able to have a ledger. I paid salaries, but I don't have a record. Son, it's so painful because if my children are even asking me today, okay, we saw this uniform somewhere, we saw this cardigan somewhere, how did this business go? What happened to it? I can't even read that history correctly because there are no records. And I really want us to know that being here is one of the greatest blessings that we can ever have because we're going to learn about bookkeeping, we're going to learn about taxes, and most above all, we're going to learn about the basic things that can give us data in our business, history, and also, that amplifier to make our business bigger. So I want to ask us, for those of us who may have that strength, how far have we gone with our bookkeeping? Just some housekeeping. In Max Front, okay, you're not in charge of bookkeeping, Max Front, so you don't know. So who does bookkeeping here? Okay, I'm coming to you, sorry.
Don't mind me sitting down because I'm tired. Yeah, okay, so I wanted to say to you that if you cannot bookkeep, you should employ someone to do so. Yes, that's one aspect to make your work easy. Then secondly, now we are in the tech age where there are so many tools to bookkeep or do a lot of things. So if you can go and make your research and figure out those tools, then you can use it to keep your records. And also I learned from a lawyer too, who is my mentor, who taught me how to put all information in a folder. Like if you have a system, you have folders. So all your receipts for XYZ, put it in a folder. All your information, everything should be in a folder. Also, one of my lecturers taught me that for every information, you can actually store them in your email. Do you understand? Yeah. That wherever you find yourself in the world, you can reach out to your information. You understand? From your certificates to all your receipts and everything. So if that's one way, today they are going to teach us their own way. I'm just giving you my own aspect. So if you have this knowledge, you won't be having this issue of you don't have information about this, because you're not aware that there are some tools that you can actually keep this information, and anywhere you find yourself, like right now, I'm not with my certificates, but if you need my certificates now, I can provide it to you now. Like as I'm sitting down, it's in my email. I just go to my email and produce my certificate and receipts of everything. Like I work in Queen's College and we take children out for competitions, programs, and all of that. Even when the management don't have information of where they've taken the students to, and maybe when they need, they just call me, and I can provide those things. And also for your physical copies, you should have like folders and files where you can keep information. And the best thing, because you can actually run out of these documents, is to scan them and still upload them. Do you understand? So when you do that, all this information that you are looking for, you have something to show. You understand that you actually did what you said you did. So that's my contribution.
Thank you very much. That was powerful. Thank you, sir.
Okay, for me, that's more detailed depending on the size of your business. But two easy things you can do instead of hiring, because a lot of businesses cannot hire everybody they need. So you can actually outsource to a firm of accountants, or like Olu Joshua's kind of firm, that's what they do. So they know they have multiple clients. So maybe once a week, they will send somebody over to you. Well, in this day and age, they might not even need to send somebody, just email correspondences, you send what information. That's one. So that way, you just have like a retainership agreement with them. The second is when you make, as much as possible, your bank statements. So what we do is that every transaction we do on our bank statement, we actually write the narration. Yes. So it's easier if I download the bank statement. I can know, okay, when I spent this money here, I did it. So you reduce cash as much as possible, because cash, that one, no trace. But you buy fuel, you write it, fuel. You buy chicken. You buy law books. You do everything. So that way, when the accounts are being prepared, and again, it will now be easier for the accountant without having to be asking too many questions, or at least to ask as little as possible. So those are also two ways and simplified ways, in addition to all the great things she said. Thank you.
Thank you very much. I actually totally agree. Thank you so much for yours. I mean, I have had few times where I was very deliberate about, ensuring that I had an email list when I'll be more deliberate. And it's good to know that we are actually conscious about keeping records, because, I mean, if you don't keep record, then you might as well not have a business, because eventually you may not be able to troubleshoot when there's a need because there's no record. And you may not also be able to duplicate. A very good example is when you have somebody working for you and the person probably goes on a leave without taking permission, or the person needs to be fired, and then that person has done a lot of things and there's no record, and you want to probably hire somebody else who needs precedences. When there's no record, there are issues, right? A very beautiful woman walked in, and I want her to introduce herself. She's pressing her phone, so I'm going to actually we're introducing ourselves, what we do, why we're here, how we heard about this.
I'm sorry. Good morning, everyone. I'm just trying to settle in. Just got here. My name is Blessing Iyenobong Peter. I work with Max from Technologies. Well, I know about it because this is my church. Thank you.
And I've met two people from Mark Front, so Mark Front is winning. Yay! Okay, so when I spoke about bookkeeping, thank you very much. They both answered the questions that I had in my mind. But a deeper part of bookkeeping that I'm also eager to learn about is how to keep my accounting straight. So I don't go to the company's accounts for domestic uses, because I've also done that in the past, and I realized that exactly defeats the purpose of the business. So I see that Diadem is available to come pick up the mic from me, and she has to pay me for emceeing for free. You can't afford me. Thank you, Diadem. God bless you.
Good morning, everyone, and thank you so much for being here. We apologize for the delay, and we'll be beginning now. And we're streaming online, so we have people joining us virtually as well. So don't be discouraged by the turnout. We have virtual attendees as well. All right, so good morning once again, and thank you for being here today. On behalf of the organizing team, I want to warmly welcome you to today's tax clinic. Permit me to introduce you to the Public Good Collective. At PGC, our mission is simple. We want to empower individuals, businesses, and communities by providing accessible support and generating actionable insights that foster civic leadership and strengthen governance. We understand that running a business in Nigeria is not for the faint-hearted. In addition to keeping up with your customers, managing staff, staying on top of your finances, we often have to battle the tax landscape, and it can sometimes be confusing. A lot of times it is overwhelming. And then adding on top of that, the new fiscal reforms, we understand that there is a need to empower businesses, especially small businesses, on how to stay on top of these reforms. And so our goal today is to help you learn what the new changes are and how you can stay on top of the changes in the tax landscape. To help with following through the program, because we understand that not everybody has the technical expertise, we have designed a case study that will take us through today's program. So the case study will come up shortly on the projector. And so if you need to jot, please jot accordingly. We hope that as you progress through the event, you are able to answer the questions on the case study by yourself, such that by the time we come around to the interactive session, you already have an idea of what the answer to some of these case study considerations are. So can we have the case study, please? Okay, so it should come up shortly. Thank you so much, Sister Nora, for stepping in earlier. Let me see if I can get that here. Okay, for time consideration, I'll be reading the case study from here, and hopefully it comes up on the screen as we go. Okay, so Aisha Ibrahim is a 37-year-old entrepreneur who operates from a busy stall in Oshodi Market, Lagos State. Her business is informally known as Aisha Fabrics and POS services. She engages primarily in retail sales of textiles and related accessories. In addition to selling fabrics, Aisha provides points of sale, POS, services to her customers and surrounding traders, allowing them to deposit and withdraw cash conveniently. She began the business in 2018 using her personal savings and informal loans from a cooperative society. The business has grown gradually, and as of 2025, Aisha has 3 employees: a shop assistant who helps customers choose fabrics, a POS operator who handles cash in and cash out transactions, a delivery agent who supplies fabrics to bulk customers in nearby markets. Although her annual turnover fluctuates between 5 million and 10 million naira, she has never registered the business with the Corporate Affairs Commission, CAC, nor with any tax authorities. And so to the areas of consideration. Number 1, we want to consider what are the potential tax exposures for Aisha Ibrahim under the old regime, which is the regime we currently operate in, and which will be operating till January 1st, 2026. What are the potential tax exposures for Aisha Ibrahim under the new regime? So we want to compare what are the differences between what is obtainable now and what will be obtainable as at 2026. Is there a need for Aisha Ibrahim to register her business with the Corporate Affairs Commission? We're going to be having a legal practitioner who will take us through the rudiments of business registration. Why do you need to register your business? What is the difference between the categories of business registrations we have, and what are the tax implications? Because every category of registration has different tax implications. And so if yes to the above, if she needs to register her business, could Aisha Ibrahim consider registering as a limited liability company rather than a business name, which is a sole proprietorship or a one-man business as we know it? And then what must she take into consideration while making this decision? And lastly, if Aisha's business annual revenue should grow to over 100 million naira, what would be the tax implications, either as a sole proprietor or as a limited liability company? So unfortunately, the case study did not come up, but I hope we were able to follow through these areas of consideration. And so as the event progresses, we'll be able to have answers to these considerations. And so to take us through the first session, which will be the rudiments of bookkeeping, permit me to welcome He's a certified accounting technician. He has provided bookkeeping service to companies, firms across industries, from consulting to tech to the energy sector. And so he'll be taking us today through the rudiments of bookkeeping, what you need to know when it comes to bookkeeping for your business. How can you stay on top of your books? And like Sister Nora said, what are the requirements when it comes to your business expenses, personal expenses for a small business owner? Welcome Mr. Joseph Opakunle to take the session on bookkeeping.
Thank you very much. Yeah, good morning, everyone, once again. My name is Joseph Okpakunle, and like I said, I'm an accounting technician and also the co-convener of this program. And it's my joy to see you all here wanting to learn from little boys and girls like us. Thank you for having us. All right, I'll be going to my topic for today, bookkeeping and record keeping for SMEs. Bookkeeping and record keeping for SMEs. So, for the next 25 minutes, we are going to be discussing about how to keep your books, how to keep your records for your businesses. And initially, when people hear about bookkeeping, recording, they're already sweating like, oh, all these technical terms. I don't have time for this, so I just need someone to just help me to sort everything out. As long as I'm making profits in my business, I'm fine. But I want to ask a question. Some of us, have you been in a scenario where you know you are making profits, but the bank record for your business is not reflecting the profits that you made? Has anyone been in that situation before, where you know, oh, I sold more than what I bought, but when you now check maybe your account balance is not showing. Maybe in your mind you're thinking, okay, I should have made like 2 million. But you check your account balance, your balance is showing like maybe 1 million or 500. And something is wrong somewhere. How did this come about? So it all boils down to bookkeeping and record keeping, right? So another thing I'd like to say before I move on is that bookkeeping is very essential. Number one, because it helps you, especially now in regards to tax, it helps you be compliant in the sense you are ready for filing your tax. And even when the FRS people come, you know what you have done. You know the arrangements of your books, what you've sent out and what has come in, and you can be able to defend your accounts when they actually come to file you for tax, right? So next slide, please. All right, so this is the case study that Diadem was reading earlier. So it says, Aisha Ibrahim is a 37-year-old entrepreneur. I just want us to get familiar with the case study, right? Who operates from a busy stall in Oshodi Markets, Lagos State. A business informally known as Aisha Fabrics and POS Services engages primarily in retail sales of textiles and related accessories. In addition to selling fabrics, Aisha provides points of sales, that's POS services, for our customers and surrounding traders, allowing them to deposit and withdraw cash conveniently. She began the business in 2018 using her personal savings and informal loans from a cooperative society. The business has grown gradually, and as of 2025, Aisha has 3 employees. Although her annual turnover fluctuates between 5 million and 10 million, she has never registered the business with the Corporate Affairs Commission, nor with any tax authority. Next slide, please. And so when the tax season came, so this is just my input to kind of relate it to my topic. So when tax season came, FIRS asked for our records. She couldn't provide them. She paid unnecessary penalties, missed out on the government SME grants, and worst of all, she realized her business had been losing money for months without her noticing. So what is the moral of this story? Because as you can see, Aisha, number one, she has not registered her business. She didn't keep her books. She's just going with the flow, as most people actually really do. So the moral of the story is that no matter how great your product or service is, if your financial records are a mess, your business is working blindfolded. Because bookkeeping isn't just about taxes, it's about knowing your business story in numbers. And what that goes to tell us is that you are not just keeping your books because of taxes. Yes, it is a symbiotic relationship that because you have to file your taxes, you have to keep your books. And because you are keeping your books, you are able to pay the actual amount you are supposed to pay for your taxes. But this is the relationship between taxes and book. But beyond that, it also helps in, for example, if you want to take a loan, maybe you are trying to expand your business, right? And then you go to meet like venture capitalists or investment companies to actually give you a loan to maybe like boost sales or just expand the business in general. One of the things they will actually ask you is a recent financial report, right? And there's no way for you to have a recent financial report if you have not been keeping your books appropriately. So next slide, please. So what exactly are we talking about? So now I'm about to go into the basics of bookkeeping and record keeping, sorry. Next slide. So what is the difference between bookkeeping and record keeping? Because they're actually two different terms, right? So I said here, record keeping is the simple act of collecting and storing your business documents. It is the raw material. Think of it as taking pictures at the party or you're just capturing moments. So an example of this would be what recent businesses or small businesses nowadays do, where you purchase something, you collect receipts, you just go and throw it somewhere. I'm start keeping the record. You get you buy something, maybe you buy fuel or something, then they give you a receipt, you keep the record. You just trash everything inside one bin. It's not organized. You're not trying to make sense of what those records actually are. That is what bookkeeping is in general. It just like comes to a party. For example, Miracle right here is taking pictures of this program. This is keeping record of this program that is going on right now, right? But bookkeeping now comes in place when we now start editing, sorting the pictures. Oh, this is what happened at the beginning of the program. This is what happened at the end of the program. This is what happened during the program. We shared stuffs and all like that, right? And that is what bookkeeping is. So an example of record keeping is your supplier receipts, your customer invoices, your bank statements is also part of your records. Your payroll slip is also part of your record. Your transport tickets when you travel for business is also part of your record. And these are necessary because they are your evidence. So if you tell me you traveled out of the country, I'll ask, where's your flight tickets? Because that's an evidence that you actually traveled out. Or in case you're taking bus, where's your bus ticket, right? So these records are the evidence that you're actually engaged in those, maybe made those expenses or actually made those sales. Then you now have the next step, which is bookkeeping. It is the process of organizing those records into a system. It's taking all those, in our case, like the example I made about pictures, all those party pictures, arranging them in an album, editing them, and writing captions so you can tell the story of the party later, such that someone that was not in that party, you can be able to use that album to give them a whole view of what's happened in that program. We are not just babbling and say, oh, this thing happened. I'm like, what is the evidence that this happened? Then you show them, and you can also show them in order of what happened. So that is what bookkeeping is. An example of that is now writing down every sales you made in a sales journal. That's an example of bookkeeping. Recording all your expense in an expense ledger. That's also bookkeeping. So you have the records at the same time, keeping them in your books. So the records are evidence of the books that you have kept. So that's the relationship between bookkeeping and record keeping. I hope you understand. In short, records are proof, while bookkeeping is the story that it tells. Sorry, next slide, please. So records are proof of the expenses, the sales, and every financial transactions that occurred during your business, while bookkeeping is now the story you tell with those records. And as you all know, FIRS, they want to collect tax. So they want to hear your story. Yeah? So if you are saying, if they come and, for example, part of the new reforms that has been made is the access to bank statements so that they can draft like their own version of what your tax should be. So now it's about comparing stories. FIS has drafted Mr. Ajanle Kuku. From our calculations, your tax is 2 million. If you are not keeping books, you are not able to defend that. You are not able to tell your story and say, oh, no, it can't be 2 million. And that leads to one of the issues of not keeping books, where you might have overstated tax payments or double tax payments in some cases. Next slide, please. So why is this so critical now? The reason why bookkeeping is critical now is because the Federal Inland Revenue Service, FIRS, which will now become NRS, and the State Internal Revenue Service, those are the tax collecting agencies, they use your records to assess how much tax you should pay, and they do so fairly in that case. So the simple logic goes that when you have good records, you have clarity in what your record, your financial record should be, and then you're able to fairly pay your tax. But if you have a messy record, then there's no clarity on what is what, and then you might have an overstated tax payment, right? So it leads to assumptions, because you have to assume, oh, these payments that I made, I think it's because of something like that. And then you have to say, oh, this is also part of your payment for tax, right? So if your records are a mess, there are 3 things that could happen. Number 1, you could be overpaying taxes because you can't prove your legitimate expenses. Another thing that could happen is you might be underpaying taxes accidentally, and then you now have to face penalties and interest when the FRS now comes with a version that, oh, you paid, let's say, from your own perspective, you didn't keep your books the way it should be, and then you underpaid, and then the tax people come and like, oh, you're supposed to have paid something higher than this, and in a sense, you have kind of like failed to do your job, and then you have to pay like penalties on not remitting the actual amount that you should have done. So that leads to like penalties and interest that can actually cripple your business. Then another thing that could happen is you will be missing out on loans and investments. People want to invest in your business. People are interested in your idea, and they want to invest, but they also want to see how feasible your business is. They want to see, oh, is it worth it to invest in you? Well, if you're not keeping records, there's no way for them to know, and then they just withdraw. So you'll be missing out on loans, you'll be missing out on investments, because no bank will trust a business with a messy book. That's just the truth. Now, okay, and another thing that keeping your records does for you is that it also makes you look credible. It's called, there's a reason why they also call it accounting. It makes you accountable. And someone that is accountable is someone that can be trusted, right? So when you're accountable, it makes you look credible to the investors, to the banks, and all like that. I said here, your financial records are your business health report card. Personally, as human beings, you will not ignore your blood pressure. I checked my blood pressure on Sunday, and I saw it was elevated. I had to say, bros, you have to calm down. Try and be sleeping more, exactly. And that's the exact same thing with your businesses. So keeping record is like checking, it's like having a health report card for your business. Is my business LD? There's something they call statement of financial position. What's the position of my business financially? Are we making a loss? Are we in debits? Do we have loans that are outside that much? Right? So it's your business health report card, and you will not ignore your blood pressure. So do not ignore your financial books. All right, and that takes me to the next part of my session. Next slide, please. So interestingly, to make this, next slide, please. To make this more relatable, I termed this part of my session the Ashoebi of bookkeeping, your essential records. So if I may ask, I hope you all know what Ashoebi is, right? So Ashoebi is a uniform clothes that we use in maybe during events like weddings and all, to kind of like separate each other. So these are the family of the husband. So you know, if you see this clothes, oh, this person is from the family of the husband. So there's a uniformity, right? Then you have another clothes, you have like, oh, these are the wife's family. Then you have maybe like even the choirs too. They might wear their own different attire. You have maybe like groups that are supporting the couples. They have their own attire. So you know, it just segregates who is who, right? So you have these people, they are uniform, and you know, this is just the family of the husband, which is why I kind of termed it the Ashoebi of bookkeeping, because there are some things that you have to keep in uniformity. So such as your expenses, they are one uniform financial transaction. Such as your income, they are one uniform transaction. Your payroll, that's paying your staffs, that's one uniform transaction. So you know how to keep these records, right? Next slide, please. So the first of the Ashoebi, I put an Ankara. I don't know why I did so, but I called it the money in uniform. Yeah. So these are your sales and income records. This helps you to track all inflows of your business. So what is the sales and income record? What is the money in uniform? This is proof of all the money that is coming in to your business, right? And this is an example of this would be the invoices you issue when you make sales. You should always keep an invoice. In fact, I think this is also part of the thing that has been necessitated for the next tax reforms, that you should have e-invoicing so that you can be able to track what is your actual sales and you can be able to remit it to the tax agencies. So these are the invoice you issue. Every sale, especially to other businesses, must have an invoice. It should have your company's name. It should have your company's address. It should have your tax identification number, your TIN. It should have the dates of that sales. Then it should have maybe like a unique invoice number. That's just for audit trail. So you're not giving the same invoice to different people, right? You can be able to track it in case there are issues. So you can be able to say, oh, this issue is from invoice so number, and you can be able to track that sales. And you should also have a clear description of what you sold to the business or the customer who you actually sold or delivered your business to, right? Another part of the money in uniform is also your POS receipts. Most MSMEs right now, they also use POS, right? And luckily, POSs nowadays, I think they also generate like an end of the day reports for you, so able to know all the sales you made for the day. So that's also one of the money in records that you should keep. Your bank transfer alerts, when the people actually pay, you receive it in your bank. In fact, for most people, that is the best form of confirmation. For example, in one of the companies that I'm attending to, even if you send me the shot of the transfer you made, before we can deliver the goods to you, we have to check our own bank and see that the money entered. And that's sure that the money actually entered and we can deliver the goods to you. So that's also one of the means of the money in uniform that you keep. Another is also the sales day book. Remember I mentioned that, so your POS receipts, your bank transfer receipts, those are like the records that you keep. They are the evidence. Then you yourself should now do your bookkeeping by yourself. Record it in your ledger, on your Excel spreadsheet and all. So an example of that is having a sales day book. It's just a simple book or spreadsheet where you list out every sales you have made for the day, the name of the customer you made that sales to, and the amount you sold it to. Okay, next slide, please. So we have the next Ashoebi, which is the money out uniform. So that's your purchase and expense records. So what is your money out uniform? This is the proof of all the money leaving your business for legitimate business costs, which brings me to what Ms. Nora said the other time, that about dipping hands into the business and using it for personal needs. That is not a business expense. That's a personal expense. And this brings me to a tip that I should give you. Your business should be a standalone person. You should treat your business as a human being, right? So you don't just go to meet someone and just always take that person's money from that person's account. There has to be a process to it, right? So if you always see your business as an individual that you cater to, it helps you in regulating how you dip your hands into the business's pockets for personal reasons and all like that, right? So this is proof of money leaving your business, and an example of this would be the official receipts for every purchase you make. So from raw materials to buying fuel for the company, to buying ink for your printer that you used to print in the office, to even the monthly data subscription you use in your office or in your business. For example, you have to buy data to maybe communicate with the customers, or maybe, for example, in this case, like I said, you can also keep spreadsheets. You need data to be able to access your spreadsheet, right? So buying data for the company or for the business can also be termed as one of the expenses you made for the business. And if you want to claim anything as an expense, you should also have a receipt. The same way you are giving out receipts for every sales you make, the same way you should always try to get a receipt for every expense you also make. So, because that's an evidence. So, for example, we have back in the days where there's all this viral issue of EFCC attacking people on the road. You hear people telling you, if you buy a laptop, always keep your receipt on hand. If they see your laptop, you say, where's your receipt? You can be able to show them. because that is the evidence of the expense you made, and they are able to know, oh, okay, this is actually for the business, you instill it and all like that, right? So another example of this would also be supplier invoices when you buy from other companies. Transport and travel receipts, like I said, you can always go on business trips and travels, always keep a receipt of those travels you do. So in a sense, there are some expenses that you make that you really necessarily don't get receipts for. For example, you are going to see a client in the mainland and you took downfall. Downfall people will not give you receipts. Aha, fantastic. So how will you now record that? So in a sense, that also brings you to your bookkeeping, right? So along the lines of that, I don't want to really go too deep, not to waste our time, but for expenses where you can't, by all means, you try, you can't get a receipt, you now have to document it by yourself, right? You do it maybe like a short document and say, there's no legal receipt you can get for this, but this is an actual amount you spent on transport to so person's place for business reasons, and then maybe you can sign it, and that also works as a legal tender in that regards. And it also helps. Reason for that also is because aside for going on business trips, entering downfall, you also personally have places that you actually go to personally, and you take downfall too. So if they now ask you, what's the evidence that this one is actually for this business trip, you have nothing to show for it, except you now actually document and say, okay, this is an amount for a business trip to so customer on so dates, and this is the amount that was spent, and sign, right? So that's also one of the money out uniforms. And you also have the booking aspect of it, which is the purchase day book. So just the way you are recording every sales you make, you should also have a book where you record every expense you make or every purchase you make for the business. Buying of raw materials, what else do people buy? It might even be necessarily material, like I said, like buying fuel, buying data, and all, like buying airtime to call your customers, right? So your purchase day book, just like sales day book, is for expenses and should have the dates, the supplier that supplied that product to you, what the expense was for, which is like the description and the amount you made, right? A quick tip, not all expenses are tax deductible. Like I said, you have to segregate them. You took personal haircut as the MD of the company. You went to barb your hair because you want to go and see customer tomorrow. That is not a business expense. So you're the one that's trying to look good for yourself, right? Oh, for the business, okay. But you bought a generator for your office, yes, that's an expense that is tax deductible for your business. So keep your business and personal spending separate and get a separate, and another important note, you should always get a separate bank account for your business. For example, Mr. Busai was talking about how when they make transfer, they try and put a detailed description in that transfer so they are able to easily analyze it and put it into like an accounting record. But if you are using your personal bank account as your business bank account, now it now creates a problem necessarily, because now you have to now start finding which one is business expense, which one is personal expense, segregate that, and then now try and another thing that having a separate bank account should give just for you is that you also know the status of the amount you have in the business. If it's your personal account, you've done deduction for personal stuff. You have to start calculating. Okay, at the beginning of the month, I had so amount. This was the amount I took personally for myself. Therefore, this is the amount the business have. But if you have like a separated account for your business, you're able to know, okay, all the inflows came into this account, and out of the inflows that came to this account, these are the amounts I spent on some expenses and all, and this is the amount I have right now. So it helps you track the cash flow of the business, right? All right, next slide, please. So moving to the third uniform, you have, the assets and liabilities uniform. The assets and liability uniform. Assets, the summary for what assets is assets are things that you own. They're your property. That's what an asset is. While liabilities are things that you owe. It's in your possession, but it's not for you. For example, this all is not my assets because I borrow it. We borrowed this for this program. Exactly. So, what is assets and liability uniform? This is a snapshot of your business wealth and debts. So, for example, they will tell you Dangote is what so and so amount. That so and so amount is a snapshot of all of his wealth and debts. So when they calculate everything that he is the owner of, and then they deduct everything that he owes to maybe investors, outsiders, the total amount at the end, that is now what is now known as the wealth, or at that point, the is worth at that point. So you should always have know the worth of your business. This is the what we own. For example, your business buys a gen. The gen is for your business. It's your business that owns it. That's an asset. Compared to you needed light, you went to borrow gen from maybe like your neighbor to quickly sort something out. And then your neighbor say, you have to pay me something amount for renting my gen. And you're like, okay, maybe I'll pay you at the end of the month. You owe your friend that certain amount. That is a liability in that scenario. I hope you understand what I mean. So examples of assets are, of records you should keep for your assets is your asset register. So whenever you buy an asset in your company, you should always keep a list of those assets. An asset register is a list of everything valuable that the business owns. That's your vehicles, your computers, your machinery, your furniture, everything that the business owns. And the cost of running the business is the business assets. You write down the date you bought it, the cost at which you bought it, and technically, if you are trying to claim capital allowance, so that's like the tax benefits on those assets too. That should also be noted there. And another thing about tax assets is you calculate depreciation on assets. Assets depreciate. If you are using phone and your phone is using 7 years, you know the way you'll be feeling by that 7 year time. The phone is hanging, you are frustrated. It's because you're already using the useful life of that phone. In the same sense, you have assets. Assets also have, they're also depreciable, right? So keeping a record also keeps track of that. Then you also have your loan agreements. Now this boils down to your liabilities. When you take a loan for your business, you should have an agreement that states that you took so loan from so person, and you intend to pay that person a so amount of time for all the money you. So that's an evidence that you actually have a loan with someone. You can't just say to its mouth and tell tax authority that, yes, I know that this is the money we have, but we intend to pay somebody so amount. And they're like, oh yeah, what is the evidence that you're owing the person? And you're like, the person just transferred to me. So just take it like that. The tax authority don't take that. They always work with evidence, right? Then you should have a record of the debts that are owed to you. So there are scenarios where you sell things on credit, which means people are owing you. You should always keep track of that. Number one, it helps you know who is owing you. Because sometimes when you're not keeping those records, that's when you now remember like 3 years later, I sold something to somebody, the person not pay money. It's because you didn't keep your records, right? So you're able to track who owes you money. And at the same time, you can also owe people money. That's your payables. In terms of, let's say, in the process of trying to make the business flow as usual, you buy some raw materials on credit. That means you're owing people too. So that's your payables, right? So you should also have, there's something called inventory. So inventory is like a stock count of the things you have in place for production, right? How best can I put this? It's a stock of things that you own, but it's not as if you own it like your gen, where you are not necessarily using it in production process. It's stock of things that you use in production process. For example, you're an hairdresser and then you buy, I don't know what they call it, attachments, and you keep that. So you have a list of those things. So that's your inventory, right? Then another thing you should always keep is your payee tax records, right? So that's also one of the liabilities that you owe. Because, like it or not, this tax, you are owing government. In fact, with this new reform, they are trying to tell you you cannot run away. You are owing us money. So that is also an amount that you owe. So your payee tax record is a proof that you are actually deducting and remitting the tax as the correct amount to the states or to the federal government. So those are your tax records. So whenever you make all those remittances, always keep a record of all those tax payments, because at the end of the day, you might have to like give account of all those tax records, and you're able to show that, oh, I actually paid these taxes, right? Then you also have pension remittance records. So this is the proof that you are contributing to the pension of your employees via their PFAs. So when you pay pension for your employees, you should always keep record of that too. Also as evidence in case you are called to account for those pensions. So that takes me to the next Ashoebi called the... Oh, I think, okay, that's the fourth one. No, there's one. People. Next slide, please. Aha. So you have the people's uniform. Oh, okay. Yeah, you have the people's uniform. So this is your payroll records. Sorry, I mixed it up with the asset and liability. So this is where you have your pay tax records. Because your payee, you're paying it on behalf of your staffs, right? And then your pension, you're also paying it on behalf of your staffs. And another record you should keep is the details of your employees, their names, their addresses, their tax identification number, so that when you are remitting for them, you can attach their tax identification number to it, and they can also see evidence that you are paying their payees, right? So those are records you should keep. Another thing, the people's uniform helps you with is you can track when someone came into the business and joined as a staff and when they actually also left the business, right? Extra records you should keep, which I didn't add, are your bank statements. Now, originally, your bank statements is kind of like a sure way to kind of reconcile your accounts, because you are making transfers, it goes out of your bank, obviously. Money comes in, it enters into your bank, obviously. So when you keep your records, your sales record that you manually imputed, you can always check it together with your bank records to actually know that, oh, this is actually what came in, and this is actually not came in, or coming, actually. Because there are scenarios whereby you can actually make mistake, right, in recording it in your books. And say, let's say you sold something for 100,000. When you're typing it, another extra zero entered there by mistake. You're not seeing 1 million. You're like, 1 million, this is not right. You're able to check it with your bank statements, right? And that's why you should also keep your bank statements, because they are like an automatic record keeper for you. Then, like I said, tax and statutory payments, you also should keep records of those. So those are your VAT returns, your company income tax, that's in terms of companies, your withholding tax, your pension, your NHF. As time goes on, the other speakers will speak on those taxes. I'm just trying to teach you on bookkeeping. Next slide, please. That takes me to the next part of this session, from chaos to control. These are like simple tools and habits that you should imbibe as owners of businesses and companies. Yeah, next slide, please. All right. So there are several options with which you can use to keep your books. And the first method is what I call the Oga at the top method. And the reason why I call it the Oga at the top method is at the time when that same Oga at the top was actually in vogue, it was as a result of people saying something around the fact that these are processes that could have been streamlined into technology, and you can get these details online. But the guy is like, me is old school fashion, I know. Let me go and miss my Oga at the top, which is why I termed it Oga at the top. I hope you understand. All right, so this is the good old-fashioned big brown book. If you can see in the picture there, I put a picture of a ledger there. So this is where you actually carry your ruler and your red pen and drag it, SN for number, drag it, name. Aha. So these are keeping particulars, thank you, amounts. Aha. So it's cheap, it's simple, it's straightforward, right? It's the good old-fashioned brown book, and you can have different sections. So you have a book for your cash book, you have a book for your sales, you have a book for your purchases, right? So the rule for using this method is that you always have to be accountable. Write into your books every single day. Do not postpone your recording of all of your expenses or your transactions. Don't let it pile up in your drawer like a shrine to forgetfulness. Because if you let it pile up, that's when some receipts fade, actually. To be honest with you, there's a company I tried to work with, and then they just gave me all the receipts. Bam! I want reimbursement because I'm making all these expenses for my own money. I want company to reimburse me, calculate everything, and tell me the amounts. Half of all those receipts had faded. I'm like, how will I do? There's nothing to show for this, right? So when you keep your books too, that also helps with that, right? Then you go to the next option. Next slide, please. So I call this the tech savvy method. So this is technology where you use your Excel sheets, you use your Google Sheets to record your expenses. That way, you are sure your ink in your book won't fade, your book will not fall inside water, and then all the records have disappeared, right? You can just create simple templates on your spreadsheets. You can have one for like daily sales. You can have one for expenses. You can have one to reconcile your books with your bank, and also things. There are some formulas on Excel that you can use to like pivot and actually know like the status of your sales for the day and all like that, right? Then it also does the maths for you, and it kind of looks more professional. You can able to quickly just calculate and all just put the formula on your Excel sheet, total for the day, rather than when you are writing it, you're not carry calculator 1,000 plus 2,000 and all like that, right? Then that takes me to the next option. Next slide, please. I call it the Jedi Master method. Yeah. The reason why I call it the Jedi Master method is because I don't know how many of us watch Star Wars. So fantastic. So the Jedi Master is the master that can actually channel the Force. Exactly. It looks like magic. Exactly. And this is the technical part people try to avoid. But nowadays, there are accounting softwares that have come out that are easy, that you can easily just impute your sales. You know what sales is already. Just go to sales option, put in sales, press submit, and read the records for you. It can fantastically, people have gone far in technology where the accounting software itself gives you a report of your daily sales, of your weekly sales, of your monthly sales, and all like that. So this is why I call it the Jedi Master gold standard. And right now we have fantastic affordable options. Because one of the reasons people run away from this option is because they're like, oh, subscription for accounting software. I don't have the money. But right now there are lots of accounting softwares that are very, very affordable, right? And they automatically help you generate those invoices rather than trying to design an invoice. Those accounting software will help you generate invoices. They can help you track your expenses as you're making them, input them, and then it shows. And most importantly, like I said, they generate financial reports and the tax computation that you are meant to pay in one click. And so it is a game changer for compliance. My advice, go for the third option. All right. That takes me to the next part of my presentation. Next slide, please. All right. So the magic habits that you should have to keep yourself accountable, I call it the weekly review. So as business owners, yes, you might not have a time to actually do long journey and try and reconcile your books. But since you are keeping your records daily, I would advise that you set a date ahead. The way we like going on dates. Set a date with your money. Like I said, your business is also like an individual. Set a date with your business. 30 minutes on Friday. Just complete all your records, reconcile them, and you're good to do for the week. Next week, we start afresh, right? Gather all your receipts for the week. Update your book if you are using the Organic Help method, your spreadsheets, or your software, depending on the options you use. Then reconcile your records with your bank account. Do they actually match? Like I said, record keeping, you are the one that are imputing by yourself. But the bank statement is kind of like an automatic record keeping. When the money comes in, it goes there automatically. So you're able to reconcile and say, oh, did I actually make a mistake in keeping the records for this person? For example, if you kept a record and the person has not paid, you're able to check your bank. The person, I've paid now. You can't check your bank statement. Just say, Baba, I not see this money. You've not paid, right? Exactly. And that brings me to my conclusion. Next slide, please. All right. So I said, in this new fiscal environment, ignorance is not an excuse. Nigerian government don't want to hear excuse, actually. The government is not your enemy. A messy bookkeeping system is. So we should not always look at it from the perspective of, oh, government doesn't want to chop our money. If you don't keep your record, government will chop your money because you have overstated tax. So they will actually chop your money. So if you want to pay fair tax, you have to keep your books. And you have to keep them regularly, right? So you should, and another thing proper record keeping does for you is that it's not just about compliance. It helps you to know your true profit. It also helps you make decisions. Sometimes, depending on the position of your business at the time, you want to know, okay, should I go further in maybe engaging in a partnership with so and so person or not? Am I financially capable of doing this? You just say personally, you want to do, if I perish, I perish. You look at bank account. Exactly. The same way you look at your business bank account and say, should I do if I perish, I perish? Or should I actually go forward? So it helps you make decisions, smarter decisions. It helps you track your cash flow. That's one of the things you do. So you're able to know, okay, this is the amounts that came in. How did the money flow? The same way at the end of the month, or even before the end of the month, when your money are finished, you're not calculating. I took 1,000 out this month. How did I spend it? Oh, I bought corn, 500. You're doing the addition and subtraction. That's you tracking the cash flow. The exact same way for your business too. It helps you track cash flow. And you know, compared to individual, business is kind of on a larger scale. So the more the money, the more the headache. So when you are keeping the records accurately and promptly, you have lesser headache over your businesses. Then it helps you to sleep well at night. Knowing that when the tax authority comes, you are not panicking and saying, hey, Jesus, how will I go about this? You are confident because you know you keep your records, right? And then when they come, and trust me, tax authorities will come. And sometimes, like I said, they will overstate your tax. But if you are not keeping your books, there's nothing you can use to defend. You are panicking and say, okay, I now have this money now. Sir, can I pay small? You say, no, you can't pay small. Or in cases whereby you have now failed to remit your tax on time, and then the interest has now accumulated, and like, blood of Jesus, how am I going to do this, right? So when you keep your books accurately, it keeps you sleeping well at night. So my action plan for you starting tomorrow, next slide please, this is the final slide, is number 1, gather your Ashoebi. That's your money in uniform, your money out uniform, your people's uniform, and your assets and liability uniform. Gather it, all your receipts and invoices into one folder. Number 2 is you should choose your tool. Decide on one method you want to use. Are you using the Ogaditop, which is the big book, your ledger? Are you using the spreadsheet and software? And set it up and be consistent with it. Number 3 is schedule your money dates. That's 30 minutes on Friday, reconcile your accounts. Number 4, if everything seems overwhelming, please seek a tax or accounting consultant. It's a sign that you are growing, especially. When the money is this small, you are easily able to calculate. But when you are making millions, sometimes that headache, exactly. So you can just get a accounting professional, a tax consultant that will help you with your books. So my final note is just that you are not just a business owner, you are nation builders. And every great builder needs a solid blueprint. Your financial records are your blueprint. You have the power, you have the knowledge, and keeping your books helps you move from fear to confidence and from confusion to clarity. Thank you so much for your time.
Thank you so much. I'm sure you'll all agree with me that was a truly insightful session. I learned a lot, and I'm sure you did too. So to keep in with time, we'll be welcoming our next speaker. So his bio will come up shortly. Our next speaker is Mr. Isaac Olu Joshua. I am very excited to have him up here. Mr. Isaac is a seasoned finance professional and business advisor with a strong track record of delivering strategic solutions in accounting, audit, consulting, compliance, and business management. His experience is spanning almost 2 decades. That is amazing. He provides strategic finance leadership and business compliance support to several startups and foreign investing firms in Nigeria. He is the founder of FSC Professional Services, a tech accounting and tax consulting firm focused on making bookkeeping and tax compliance easy for small businesses. His background includes working as a top finance executive across various industries, with several years in the oil and gas sector. He is a fellow of the Institute of Chartered Accountants of Nigeria. Isaac is a prolific speaker and has facilitated several workshops, trainings, workshops on finance, accounting, taxation, and even business compliance. He's passionate about supporting SMEs and impacting emerging economies by developing business cases, financial models, and providing business advisory. He volunteers for several non-profit causes. He's the chairman of Sapphire Widows and Orphans Foundation, a trainer and facilitator with the Future Enterprise Support Scheme, and a trainer at the Covenant Capital Business School. Join me in welcoming to the podium Mr. Isaac Olu Joshua. You're welcome, sir.
Good morning, everyone. Greet me now. Good morning, everyone. Yeah, I'm so delighted to be here, and I want to say a big kudos to Diadem and our team. Can we please give them a wonderful round of applause? As you know, this is a public initiative, it's a social enterprise, just to sensitize us, right, on what to do. In fact, if maybe this event, like the organizer, if they've known, they would have applied for the grant that Tinubu is currently giving. Maybe you are not aware that the federal government is currently giving some incentives to people who can tell more people about new tax reforms. You know, interestingly, I've been seeing a lot of posts, and I have a lot of clients calling me. Every post a client sees, they send to me, and different kind of news about the new tax reform, what it means, how your bank account, they will just go there and collect your money. How, you know, people were seeing a lot of stuff. And I was wondering what was driving it. Until 2 weeks ago, I now saw the advert that there is money tied to this thing. Oh, no wonder. So everybody, every blogger today, every Instagram celebrity today will be writing about tax. That's tax they don't even know the meaning of. But again, we are in interesting times, right? And so this morning, I'll be speaking to us on what it means to build a tax-ready business. How many of us are business owners here? I run a business, okay? Let's put our hands down. The business I run is a sole proprietorship, meaning it's a business name. Let me see your hand. Okay? It's a limited liability company. Let me see your hand. I'm doing charity or NGO. Let me see. Okay, we have a few as well. All right, awesome. So, you know, we are not in a church setting, but I just remember this thing I used to say every time I facilitate a tax class for the Covenant Capital Business School. And I used to say that, look, even biblically, tax is biblical. Like tax is biblical. It's clearly written there in the Bible. Romans 13:7. It says, pay your taxes. Many people will not even think about it. Or many of you might not have come across it. That the Bible actually encourages us to pay our taxes. It means, you know that popular phrase all of us quote, give to Caesar what belongs to Caesar. You guess who the Caesar is? Is the government. Is the Tinubu. But I'm just saying, right, that the Caesar is the government that is collecting. So when Jesus was actually telling the disciples, so in Romans 13, you might think that, okay, that's one apostle just talking, right? But even in Jesus' time, he said what? Give to Caesar. And what he was referring to was actually taxes. And to even now make it very well cemented for us, so that those of us who want to be Jesus-like, you want to walk in the footsteps of Jesus. Jesus now finished the thing. When they asked him to pay tax, he didn't say, me, which work am I doing? I'm charity, NGO, I know they pay. But he paid just to avoid every doubt about this conversation, right? You know, we know what he did. Miraculously, he paid. So I can tell you too, if you do and keep your books like my brother said, maybe some miraculous way, like Jesus, you might be able to pay your own taxes as well. All right, so what am I going to be talking today? I want to tell us the foundational reason of why you must build a tax-ready business. Okay, I'll give you that foundation, and then I will talk about 3 essential pillars in the building of a tax-ready business. So because we are talking about building, so I'm kind of using some terms around construction and building. So I'll give you a pillar 1, pillar 2, and pillar 3. The person controlling the slide, please just follow me, please. Next slide. So we are going to talk about smart business structure, and I'm happy that there's also time for someone to speak to us around business structure. Then we'll talk about financial fitness, and regulatory engagement. I won't go through the case study, so I'll just kind of dive into it but I'll make references to the case study we've all heard at the beginning of this session. So what is a tax-ready business, right? A tax-ready business will be an enterprise that has all its financial records, what you've heard Joseph speak about, and documentation organized. Again, that's what he has talked about. And they are finalized and prepared for accurate and tax calculation, filing, and potential audit. Now, I'll tell you that a tax-ready business is a business that has organized their financial records. And I cannot overemphasize that enough. He has mentioned it already, right? Let me just quickly do a recap. Many of us keep records, but we don't keep the books. We do what? We keep records, but we don't keep the books. The one that is worse is people that don't keep both the record and the books. What are the records to keep? They've told you. When you sell to somebody, you issue an invoice. That's a record. When you pay somebody, they gave you an invoice before you pay. That's a record. Or they give you a receipt. That's a record. When you actually want to pay your staff, if you have more than one staff, right? Some people don't do this. They just say, who am I paying? They go to their bank. 3 people, pay 10,000, 5,000, 10,000. But you're supposed to prepare like a payroll, right? That's a record, okay? When you travel to somewhere, business related, that flight ticket is a record. So these are many records that are required for you to keep, but that is not the books. The books is the organized one. The books is all the records analyzed in an orderly manner, right? In a way that when someone if you tell someone, I spent 500,000 on salaries, they will then ask you for the books and the record. So in your books, there must have been, I've organized it, there'll be that thing he mentioned, the Jedi one, right? Where you have a ledger, okay? And this could even be a book where you just write today's salary and you've been consistently doing it, right? That's enough as a ledger, as a record, as a book. So you have that book or a general ledger that shows all the salaries. But aside the fact that you pay salaries, you know what the evidence is to the tax man? He says this salary, these people are any income. Have you paid taxes for them? Because, and these are some of the things you must be aware of, your responsibilities and obligation as a business owner. So they ask you, have you paid taxes on your staff? You say, which one be taxes? I didn't collect any taxes from them. Oh. Do you know what will happen? The taxman will disallow that expense. It means that if your profit is supposed to be 500,000 on which you are going to pay tax, and you have paid salaries of 200,000 to someone before arriving at that profit, the taxman will add the 200,000 back to the 500. Because you are telling him it's salary. The man will tell you, I don't believe it. So for him to believe it, you have to show him a proof. The proof is 2. Number 1, you show him the payroll record and the taxes you pay for those staff. Proof 1. Everybody say proof 1. Proof 2, and I will get to it later for you to understand. Proof 2, there's a requirement as an employer for you to file what is called a returns. Everybody say returns. To file a returns with the government annually. Now, there's something we call remittance and returns, and I'll get to it later. So your returns evidence that you have filed, your returns is like you notifying the tax authority of the things you have done. So as an employer of labor, no matter whether, I just have 2 staff, no problem. I have 3, I have 5, I have 10. Are you aware you are supposed to annually do a report? Let me just call it a report for easy terms. You do a report and submit it to the tax man. When you submit that report to the tax man, that is called your returns. So if you have submitted it, the man that is auditing you picks it up and say, okay, since you have submitted this to another government, you can't be lying about it. So they accept it. You see? So that's all part of you building a tax-ready business. So building a tax-ready business means that you have structured your activities in your business in a way that you are ready for any questions from the government. One thing we know, like someone always, that there's a popular phrase that says that there are only two certain in life: debt and what? Taxes. I can tell you, this concept of tax, we must graduate beyond the thinking of what are they even using the money for. We will get to that later. The point is that you cannot avoid it. And the country Nigeria now, we are in a very critical place where we now want to become like the other countries we envy. You know, most times when we are thinking about what are they really doing, what's with our money, the truth is that in other climes, they are paying higher taxes. I know the argument is that, but we are seeing what they are doing with it. And so maybe the way to get there is this. We too, we pay our own first. They will now demand. Do you understand? Because that's... But I can tell you that that's the only way it works in any society. It's not that the government do first and then ask you to pay later. And you know why? It talks to the reason why taxes are collected in the first place. The reason is it's like everybody's fair share contribution to the growth. So if you have not contributed, it's kind of imbalance for us to demand. Do you understand? So that's just the concept. And it's not only in Nigeria. Is across the globe. This tax is not peculiar to Nigeria alone. If you go to other climes, what you enjoy for free today, you might not have the benefit to do it in other clime if you have not paid your taxes. Okay? All right, so let me quickly go. So talking about what a tax-ready business means, I've explained. You've organized your records in such a way that if the taxman knocks your door tomorrow, and demand for certain things, you are not panicking. You are not afraid. You can answer them confidently. So my mission here this month is to prepare you and equip you with the knowledge, information, and the practical steps to make you not be afraid of the government. I will tell you a story. I have a client, and this client, every time the taxman knocks, because I'm their tax consultant, we are not running up and down. So recently, the taxman came, we sat down, they say, bring this one, we show it. Bring that one, we show it. Bring this one, they show it. They asked me a question, I answered, they were like, why are you so confident? And I'm like, because I know this company, if it's another client, I can be begging you. This one, I will not beg you. This one, I will not give you pure water safe. This one, I know they've paid everything. And that is what a tax-ready business means. A business that is ready to beat their chest when the taxman comes around. Now, what is the benefit of doing this if you have built a tax-ready business? Number one, obviously, you are compliant with the law. Let me tell you, please, in this new era we have from next year, not complying with the law, the penalty is like this before. It's now like this. Do you understand? If you don't comply, it's like this before, but it's now like this. And the government is trying to do everything possible to capture everybody, right? And so it makes you compliant with the law. So you are not running foul of the law. Number two, it allows for sound financial planning, because we can't talk about you being tax ready without talking about what Joseph mentioned. And when you are doing what Joseph mentioned, which is keeping your books organized very well, you are not only preparing yourself for just tax, you are also helping yourself to know more about your business. Do you understand? And you can make critical business decisions. There are so many people, I've seen people, most of my clients are coming from people who are saying that, Isaac, I know we are selling, we are making sales, but I'm really not sure. Are we really profitable? I was in a meeting like that with a client last week. He said, I know. The client is into construction. So Mr. A gave them 50 million. Another Mr. B gave them 70 million, 100 million. So there's a business that is receiving a lot of money. So when they look at the bank accounts, the bank account is what? Very fat. But you know that the cost of construction is not it doesn't stay the same. It's scaling up. So the man has given them 100 million today, and is expecting them to bid in 2 years' time. But the cost across the 2 years' time has changed over time. In their mind, because they are seeing one big money in the bank account, they may be thinking they are making profit. Is that correct? Now, but if they've organized their book, they can tell, oh boy, we are overspending here. Oh. Cement was budgeted at 10 naira, but now it's 15 naira. Do you get? So they're able to then make a decision whether to go back to the client and say, sir, we know we gave you 100 million, but with the economic reality of things, we cannot execute this project. You know, who remember the story of somebody who had that kind of issue recently? That real estate guy, Abi, Sujimoto, Abi, you heard the story. He collected some plenty money to do certain things, yeah? His excuse, we don't know how to it is. Was keeping proper record. If he doesn't keep proper record, he wouldn't know. He would just be spending, finish the project, thinking, they pay me good money. But because he didn't keep proper record, he didn't know. Do you understand? So that's very important. The next thing is that only compliant businesses are able to actually attract investors' fund. Let me tell you something. My business works with a lot of tech startups. When you talk about tech startup, people comes with ideation and then scale up and all of that. There's something I've always seen. There's something we call due diligence. Due diligence is that before an investor put money in your business, they will go and talk to a professional firm like me and say, help me check that guy. Whether everything is supposed to do, he has been doing it. And guess one of the things they are checking for? Has this guy been paying his taxes? I don't want to give you 100 million. Only that you collect it. The next day, the taxman knocks your door and demands 50 million out of it. And the money I gave you to invest and grow the business, you use it to go and settle the taxman. I don't want that. I don't want that you're owing somebody and I didn't check. I gave you money to grow the business, but you carry the money and go and pay a liability. Do you get? So the investor is very, very, very keen on those who have been paying their taxes because they know that unseen liability will not come from that. Okay? That's number one. Number two, if you have noticed, there are some different grant bodies today, even in Lagos State, right? And in Nigeria and outside Nigeria, okay? Those grant bodies will always ask, are you tax compliant, right? Today, I think LSETF, Lagos State Employment, something like that. They give a lot of grants, okay? Seed capital and all of that. But if you are not tax registered, I beg they don't go give you. It's almost like you want to collect from the pool of what every other person has been contributing to, but you never contribute your own portion to it. How now? Say how now? It don't go happen. Do you understand? Then the next one is business growth. Okay? A tax-ready business is a business that is positioned for growth. Okay? And lastly, if you are paying your taxes on time and you are ready to challenge the taxman anytime he comes, it means you have positioned your business to avoid taxes and penalties. Okay? And so these are the benefits. So what is the very first pillar of building a tax-ready business? And this is structure. I won't spend too much time on structure, because I know that someone will speak about it, okay? But I'll just give an overview. So in Nigeria today, there are two main principles formulate their business. It's either you are registered as a business name, and I asked earlier, I see some hands up. Liability company. That's the second one, okay? And we have some people that could be partnership, like maybe the likes of the PwC or some legal firm, some architectural firm. It's not only you. You partner with someone, two architects, estate surveyor firm, right? Two of you, or you can even be a normal business, fashion business. There are two of you, you went into partnership to start that business, and you register it. Two of you are listed as partners, right? So we have those form of businesses. And lastly, you have those businesses who are for charity, right? The good ones among us who want to really bless other people out there with something or whatever, right? They say it's not for profit, but trust me, they're always looking for money. But they say it's not for profits, you know. Anyway, so you have the non-profit organizations. Now, this is my point to you. You must critically review yourself, your business, and pick the one that best suits you. Is it what I wrote there? Okay, it's not showing it. I said, choose the right vehicle for your journey. So ask yourself, what do I want to make out of this business? what do I want to do with this business, right? And let that guide you. So today you are just starting out, nothing much. You don't even have a shop yet. Should you do a limited liability company or should you do a business name? Now, what you need to understand is the requirement of this various nature of businesses. If you do limited liability, what it means is that everybody, not just the government, everybody sees that business as a separate person. Okay? If you do business name, if you like, do any brand you call it, that business is you. In fact, that is you doing business as maybe like FSC professionals now, okay? So this is Isaac doing business as, anytime I'm doing business, I say, don't call me Isaac, call me FSC. But it is still you. So whatever income you make, right, is going to be taxable in your hand as you. Do you understand that? If you register as a limited liability company, this is Isaac. But standing again separately is FSC. Two different entities. Isaac will pay tax, okay? FSC will also pay tax because they are two separate people. Do you understand that now? So that's what it means for a limited liability company. And for a limited liability company, there are always more regulations because they are seen as an entity on its own. So there are more regulations, filing requirements, and demands. So you must understand this and say, okay, can I afford all of these troubles right now? Or do I want to just stand as my own first? And interestingly, in Nigeria, you can actually morph. You can start as a business name and morph into a limited liability company. My firm, for example, I started it in 2012 as a business name. In 2019, I morphed it into a limited liability company. And with limited liability company, it also means that you are able to ask for other people to join your business, either as shareholders. You can't do that in a business name. Do you get? But you can do that as a limited liability company. Other people can come and invest and be part of the business. But it dilutes your own. You are not the sole owner anymore. In business name, you are the sole owner. You are the Alpha, Omega, and the Almighty. But in the limited, you have other people, okay? And aside having other people, you even have people you entrust the coordination of the operations with. They are called the directors. They are also still separate from the owners, who are the shareholders. But interestingly, in Nigeria, 90% of the directors are the what? Are the shareholders, in Jesus' name. Amen. All right, so now, what are the key things you need to consider as you are thinking, should I do business name? Should I do limited liability company? Number one, hiring your first employee, for example, right, would matter a lot in your consideration. If you are a business name or a limited liability company, one of the things you want to think about is, as I hire my first staff, now this one comes across anyway, do you know that you must, I mentioned earlier how you have to give a report annually as an employer of labor, okay? So you have to register as a company, and, sorry, when I mean company, your business has to go and register with the government to say, I'm going to be employing Mr. A, Mr. B, Mr. C. Even if you don't know their names yet, just say that my business will be employing people, okay? You get a tax ID, and your responsibility is to then taxes, okay? So number structure matters at that point. Worry, if you're a business name, should I draw salary? Should I draw dividend? If you are a limited, obviously you can say I'm drawing dividend, okay? Or you can still pay yourself salary. In a sole proprietorship, if you like, draw salary. If you like, call it dividend. All the profits, now you get them. Everything will be taxed. In limited, you can say I'm only collecting salary. So your salary will be taxed and the company will be taxed. Then, or you can say I don't collect salary. I'm collecting only dividend. Remember that dividend can only be paid out of profit, Abi? So you only collect dividend. That dividend will be taxed, and the company will be taxed. I don't know if you understand what I'm saying. So, as you're structuring a business, you're thinking, how do I want to be taking money from the business? So, in a sole proprietorship, it doesn't matter how you take it. Whether you pay yourself salary, maybe your business is making 10 million. I say, I'm only collecting 1 million, no. The third one, we say, the remaining 9 million are still your hold. You will tax the entire 10 million. Do you understand that? But if you are a limited and your company makes 10 million and you pay yourself 1 million, the government will tax you 1 million as you, because you collected 1 million as salary. Then it will tax the company the 9 million as the company. Do you understand the difference? So you are paying differently from what your company is paying. But if you're a sole proprietorship, now you get everything. Do you understand? So those are the things you want to think. How do I want to really structure it, right? Do I want to get everything taxed in my hand as me, or I want to formulate a separate business, right? Where that business is limited and can get taxed for its own, I get taxed for my own. So those are the things you're thinking in your structure, right? And so that's where you really begin your journey. The second pillar is what I call the financial fitness, okay? And that journey is a lot of what Joseph has talked about. So now I said that keeping your financial record is the key to unlocking capital. What is capital? That is the resources required to scale your business, right? Good. So what most lenders and investors are looking for, they are looking for businesses that have kept their books up to date. Still 2 days ago, I've been dealing with this startup, and they call me out of the blues. This is a company we were working with. I'll be begging them, send your bank statement to us. Let us update your books. Okay? The last time they sent their statement to us was in June. So, and we keep their books monthly. So I said, send us your bank statement. They no answer. Send us your bank statement to keep your books. Update your records. They didn't answer. Then, 2 or 3 days ago, they called. Isaac, can we get the updated books by tomorrow? I'm like, Kwano, how far now? What happened? They say, what happened is that we are trying to raise money, and the investor says that we have signed, but the investor has not released the money. He said, show me your updated books. And the man is smart, because as at the time he checked their books, everything is fine. How does he know, like in the last 3 or 4 months, some bege has not happened? Such that when he gives the money, they just use it to go and pay that thing. So the man said, oh, boy, before I put this money, can you give me your updated books? Do you understand? So there's no way you can attract. Smart investors will always demand. They will ask for your updated books. They will ask for your updated records. Obviously, what are the books they're asking for? The things Joseph has mentioned, the financial report, income statements, your balance sheets, and many things like that, okay? They will also ask for sometimes your evidence that you have paid your taxes. Like I mentioned, nobody wants to give you money and expect you to use that money to go and pay a tax liability. Okay? Now, also sometimes, do you know that if you want to secure loan from the bank, or maybe any, what we call DFIs, debt financing institutions, they will always ask for your evidence of taxes as well. Now, we are in a place where incentives, loans, grants will only be given to tax compliant businesses. And so you want to really position yourself for that. Okay? Now, I've said it that your financial records and taxes, and Joseph mentioned it, they have a symbiotic relationship. Okay? If you've been keeping your books well, you will also be able to tell how much tax I'm supposed to pay. And I used to tell clients that, look, we will help you such that you will not pay more than you are supposed to pay. If you are supposed to pay one, you will not pay extra. But that can only happen when you have been keeping your books. And somebody that has been keeping their books well as well, so somebody that has been paying their taxes and promptly, is also a kind of testimony or something that validates the fact that they've been keeping their books well. Okay? So, what are those things that you need to do in keeping your books well? Number one, separate your business from your personal finance. Joseph talked about that already. Okay? Especially if you're a business name. Number one, if you're a business name, I have a separate bank account for my business. Raise up your hand. Separate bank account. Now, remember I talk in structure. Business name, now still you, Abby. But you is still different from you. Because you are running it as a business. I should not be going through your bank statement and I see that you bought tomato yesterday. You shaved, you cut your child's, you had a haircut for them, or you went to the salon yesterday. I'm asking, how does this relate to the business? Do you understand that? So you have to keep things separate. So I'm even particularly saying this for those who are business name. If you have a limited liability, the chances are you most likely have a separate bank account for your business. Though we know the practice. The network is not going to pay to my account. I've had clients that would say, oh, somebody invoiced me with limited, but they put the account number, their personal account. I tell the client, don't pay. Tell them, give me the business account. Do you understand? You cannot invoice me with FSC limited, and I say, pay Isaac Olu Joshua. I don't understand. Because I know they are separate people. Have I not told you that? So why are you not telling me the business who supply me is FSC, but I should pay another person? That's where you should reason it. Do you get? They are separate people. So, but if you are running a business name, I beg you in the name of God, one of the favor you can do yourself, register a separate account, okay? Good enough, you can register it in the name of your business because you register that business as a name, okay? So have a separate account where you keep your things and keep only business-related items there. Don't do personal transactions from it. But I know the challenges for many of us. You are drawing money all the time. I tell you, every time you want to take money from your business, also go and write it down. I want to collect loan. Write it out in a document. If possible, draft a loan letter for yourself. Do you get? To show that you are moving money from the business. And the day you are moving money into the business, you can put it there to meet borrowing loan to I'm giving loan to what? To my business. Okay? Very important. Number two, the Jedi thing. Use accounting software. Is very good. It will keep your books organized. Okay? Like Joseph said earlier, remember all those records we talked about. So you've told somebody you travel and they are looking at your books. Did I tell you? Because it's not enough for you to organize your books and say, my expense is A, B, C, D. They will ask for proof. The taxman will ask for what? For proof. One of the things that makes people pay more taxes or get afraid of taxman is because they don't keep records. Because when they tell the man, I pay salary 5 million, the man asks for proof. You have nothing to show. You say, I made transportation 500,000. The man asks for proof. You have nothing to show. Okay? So those proofs are very important. What I would advise you to do, like he said, those receipts, POS receipts, they used to fade though. 3 months they fade. Snap it and keep. Open a Google folder, organize them there, and have them listed carefully there. Okay? Then the next thing is do regular reconciliation all the time. We've had situations where people didn't know, even that's happened to me. Bank took money from me 2 times. But because of boy, I did do my reconciliation daily. I don't see I don't call the bank. Oh boy, now 2 times I debit me. They say, okay, we've seen it. They reverse it. Bank can also sit on your money, trust me. You know, because they deliberately do it, they are dealing with number of customers. They are not checking for you. Do you understand? If the system captures it, the system do an automated reversal. But if you don't sit on it and they don't know it, the system doesn't capture it, that money is supported law. So, now it's a bill. So, you have to do regular reconciliations. And lastly, you have to promptly file your taxes. I'm running out because of time. Now, Joseph has mentioned this, but I'll just give you a list. What are the documentation you need to keep? You want to be ready for tax? Number 1, customer invoices and contracts. For every sale you make sure you generate an invoice, okay? Number 2, vendor bills and expense receipts, okay? You want to keep them. Number 3, your bank statement. On a monthly basis, request it, generate it, download it, and keep it. Number 4, record and proof of tax payment. If you pay any taxes, get the receipt and evidence of payment and keep. All this I'm saying is because of tomorrow when the taxman comes ready. These are the things they will ask for. If you are not ready, if you can't provide those records. Payroll records, I've mentioned it. Asset register. You buy an asset. The taxman wants to know, who does this asset belong to? Let me give you a quick trick. If you buy an asset as a business, and this can easily happen to anybody. So you're into tailoring or fashion business, okay? And you register your business name. Now you want to go and buy your sewing machine. You just go to the market, you pay, they give you, and you go. Or they even give you a receipt. But the receipt was in the name of who? Yourself. No, tell them, I beg, put the receipt in the name of the company. I'll give you a good example. Recently, my wife just started a photography business. And I helped purchase the material. I kept telling the guy, when you get to the, I said, don't forget to allow your photography. If they hear me, that's what you should put to. Don't go and say, let me go buy them. They just say, hey, okay, what's your name? They just write your name. Joshua, sign. You know, well, I don't happen, no. Because I won't be able to claim those assets as my own. Do you understand that? So I was mentioning to him, make sure they write the company name on the receipt and invoice. And you have to provide it for me, okay? So there's also rent agreements. Many of us don't have rent agreement. Those are areas the taxman is always looking for. There are certain things the taxman will ask for when he comes. He wants to know, because rent is something that they always collect tax on. So have a rent agreement and have it keep. And lastly, you are preparing your audited financial statements, okay? I put a link here, so if you can scan it. This is the Jedi tool that you can use, please, if you can. So I don't have an accounting software that can help me organize my records. This one even have a free version. They have a free version. You can start from the free version. This is Zoho Books. You can scan it, and it will link you to certain forms. You can fill it, and you can begin to use it to keep your books. Have you taken it? Oh yeah, let's take it. I only have 2 more minutes. Secure code are disabled. I didn't test it, I'm sorry. Okay, I will send it to the organizers, and they would drop it on they'll send it out to us, okay? All right, so lastly, as you are thinking about building a tax-ready business, the last thing you're asking yourself is that, okay, the taxman will come. I already told us. It's certain they would come. And I used to tell my clients, some people say, since I've started my business, nobody has visited my business. Congratulations. But as sure as heaven stands, and you remain in business, I can tell you that one day, they will do what? They will come. I've seen it. Someone said they've not come. In fact, that day it just occurred to you, you were talking to somebody that they've not come. 2 weeks later, they will visit. You would think that, in fact, you can think that the person you were speaking with that went to go and rat you out. But it's not the case. Do you understand? And we are coming to the situation now where everybody, you cannot escape it. You will get eventually visited. They will knock on your door one day. So when they knock on your door, how can you be ready? Number 1, you might need to get the support of a consultant like myself, right? Because they understand their language. And let me tell you, our revenue agency today in Nigeria, they are not like maybe in other climes. They are focused on revenue. They are focused on what? Revenue. You know what it means? Like bankers, they give them targets. You know what it means when they give targets? If they give a banker targets, a banker, oh boy, is begging you, he's doing anything. You know, it's too nice to you because he wants you to come and do deposits. It's the same way the taxman behaves. When they give them targets, they will come knock on your door. They will tell your guy, you are owing 10 million. They will just give you one figure. If you go and Jones, you pay, you know, you are afraid, help me, it's not 10 million. The man knows that you're not supposed to pay more than, maybe you're not even supposed to pay. You are now begging to reduce 10 million to 2 million. But if you keep your books well, you say, oh God, which 10 million? Let's go through my book and record. Let's see. How do you arrive at your 10 million? You can take them on confidently. And sometimes you want to get the support of a tax consultant to do that. Number 2, you've been filing and paying the taxes on time. Not paying on time will lead to penalty. Number 3, you are conducting a self-audit. You've audited yourself before they come. So you are asking a professional, let me check. Is there any taxes I'm supposed to pay? What am I owing? Let me pay now. You have done that for yourself before they come. Okay? Other thing I want to mention is, please, if a taxman comes to knock on your door, if a taxman don't ask for something, don't give. Give only what he has asked for. I've had a situation where we are being audited, 2 years audit, the taxman is saying that, can we add the following year? I say, for where? Waiting your letter talk, 2 years. I beg, more keep on to 2 years. You didn't ask me for this record information, I no go give you. It's what you ask me, I'll give you. Because if you do that, you might expose, if you give more than they request for, you might expose yourself to other things that you are not even aware are subject to taxes. Okay? And of course, after the audit has happened, okay, they will come up with a report. You have 2 options. Either you fight it, it's called objection, and you have a window of 21 days by law to refuse and say, this is not my liability, I do not accept it. In the new tax law that we have, there's now, in fact, that was done this week, this week it just ended. The office of the tax ombudsman was instituted. What does a tax ombudsman mean? It's an arbitrator who comes to say, are you around with the taxes? Let me check. He can fight for you. Do you understand? That has now been put in place. So these are some of the ways you can manage your taxes. Now, in case a taxman is coming to your door, what are the common pitfalls? I will wrap up in another 5 minutes. Number 1, you want to make sure that you have not been mixing your personal money with the business money. I've said that, okay? Now, the second mistake you can do, which can be very dangerous, is that every outflow is not an expense, and every inflow is not an income. That's why you must have been careful to put right places in your record, okay? Then, poor documentation. You've not been keeping proper records. It will lead to higher taxes. This one, very important. If you falsify records, you have gone and doctor your record. You say, they say, give us your bank statement. So you go to the bank statement, you remove some inflows. Trust me, they have a way of finding out, and it will not help you. Or your business has made up to, say, 20 million. But when you are submitting your account, you told them you made 10 million. You have just put yourself in problem. And I will tell you why. Let's say in that 10 million you say you make now, your profit is just 1 million. And you pay tax on the 1 million, you are happy. But when they go and check your record, they now see that it was 20 million. You know, you that is trying to make a 1 million profit, as you reduce your profit, maybe even reduce your expenses more. Do you understand? So that this thing can balance out. So when they now find out your real income, that extra 10 million, they will add it to it. But they will not allow you to add more expenses. So that means that that entire 10 million becomes your profit and becomes taxable. So you don't want to do that, right? And I mean, as Christians, that's also not acceptable. Then late filings and remittances. If you are filing late, like I told you in the new tax law, 50,000 first month, 25K every month is heavy. You don't want to do that. And lastly, if a taxman writes you, don't ignore it. I beg, now their own day they talk. They can actually lock your business. They can freeze your bank account. These are things I've seen live. That's happened before. They can put a freeze, a hold on your bank account, and you are not able to trade anymore. They can blacklist you, and people are afraid to do business with you. Do you understand? So you want to make sure that all those things, you avoid them. So what are the things we've discussed today? 3 things. Number 1, you You want to review your structure as a business. Is my structure the best thing for me today? Okay? So some of you might be thinking today now, maybe it's better for me to go as a limited liability company if you're already a business name. So you may want to take an action on that today. Number 2, you want to say, can I start keeping my books organized today? What software do I need, right? And you want to do that from today. And also you want to build your team. Your tax consultant and accountant are part of your team. I used to say it, like they say, you cannot hide from the person that will bury you. You don't lie to, there are 3 people you should not lie to. Let me put it that way. Number 1 person is who? Your doctor. He's trying to help you. Don't lie to him. Okay? Number 2, your lawyer. Don't lie to him. Because that information you didn't tell him, if it could be your opponent or your other party will come up with that information in the court of law, taking your lawyer by surprise, and that become a game changer against you. So you don't, even if you have done the wrong, tell your lawyer. He knows how to use the law to bend it. Do you understand? But not telling him doesn't favor you. Then the last person you cannot lie to, sir, is your accountant or tax consultant. To invest ourselves in the tax laws. So we know that as beautiful as the tax law is, there are loopholes. You might not know it, but we know it. So when you're looking at your business, we know how to help you position it in another way. Do you understand? Such that you pay lower taxes. So you don't want to hide information from us, because the information you hide from us will come back to bite you. But most importantly, your accountant and your tax consultant. I have a client who the accountant don't see the revenue. They're just posting expenses. When I ask them, and they want us to set up something for them, you know, where the income, where the customer list? Nah, madam, no. Madam doesn't want to give. I deal with high net worth people. I don't understand. When the taxman comes, you tell the taxman you deal with high net worth people. You don't want to expose them. It doesn't work that way. Okay? Yeah. And I think that's it. So my final encouragement is that you should remember that being tax ready is a continuous process. It's not a one-time event, right? And when you build a tax that is ready to face, a business that is ready to face taxman at any time, it means that you have built a business that is well run, a business that is scalable and ready for growth. Thank you very much.
Thank you, Mr. Isaac. I hope you've learned quite a lot. All right, so we still have more in store for you, don't worry. We'll finish it today. By the time you leave here, you yourself will be a tax consultant. All right, we'll quickly go, because of time, into the next session. So this next session is going to be taken by the originator of this program. I am a call convener, but the person that brought up the idea. She's very passionate about helping MSMEs. She's also a tax professional, and she's really good. She's really good, and also she works for one of the top accounting firms in Nigeria, and I feel she's in best place to actually give you technical details of how to go about your tax. So with a round of applause, help me welcome Diadem Enison.
Thank you very much. That welcome. Everything he said about me, now I'm nervous because I'm like, what am I going to do? But anyway, I'll be taking us through the new tax reforms. We'll be exploring the impact of the new tax reforms on small business operations. So I believe most of us here, we own MSMEs. And so we'll be looking at what does the law qualify a small business as, because it goes beyond what you think, right? There's a definition in the law. So we want to understand what is an MSME and what are the tax requirements of small businesses in Nigeria. Okay, so the slides are not up, but hopefully they will come up soon. So let's begin by going through an overview of taxation in Nigeria. what is the basis for taxation? And we've all been hearing about the fiscal policy reforms. What inspired this in the country? And so we all know that Nigeria used to be a very, most of our revenue used to come from oil. But then in recent times, when the UNDP published the results of countries by tax to GDP ratio, Nigeria ranked very low. Nigeria ranks as one of the lowest countries when it comes to tax to GDP ratio. And so this inspired the government, like, what can we do to increase the tax to GDP ratio? And this led to the fiscal policy reforms. And so the primary aim, according to the fiscal policy reform, is to widen the tax net. The government is not necessarily trying to increase the taxes that we pay based on the reforms, but they are trying to bring in more people into the tax net. And so some of the interesting things about the reforms is that small businesses get to pay more. When it comes to personal income tax, we see that people who earn less get to pay less, which is the hallmark of the progressive taxation system. And so, so the collapse in global oil prices in recent years exposed the vulnerability of Nigeria's mono-economic system. And so what that means is that when oil prices went down, it became very obvious that the revenue that Nigeria is generating is not enough to sustain development and infrastructure. And so this inspired the government to go on with the fiscal policy reforms. In response to this, taxation has been repositioned as a strategic fiscal instrument for sustainable revenue generation. Consequently, reforms have been directed towards broadening the tax base. We already went over that. And bringing in small businesses, which are the backbone of the Nigerian economy, into the formal tax net. And so this is a quick fun fact. Did you know that up to 85%, and I did not stutter, 85% of jobs in Nigeria are provided by small and medium-scale enterprises? Did you know that? That's very interesting. And in addition to that, 48 to 50% of the GDP that Nigeria generates is also provided by small and medium-scale enterprises. And so what that means is that each and every one of this room actually play a very big role in Nigeria's revenue generation. Going ahead, a small business by law is defined as a business with annual turnover of less than 50 million naira per annum, and with total fixed assets of less than 250 million. Now, my session is more of the technical part, so please, you guys should not look bored, because if you look bored, I'll be discouraged. Anyway, so what that means is that if you go through your books and you calculate how much your business revenue, your turnover is, and it is less than 50 million naira every year, you are classified as a small business. And then if your revenue is more than that, it doesn't matter if you operate out of a small kiosk somewhere at maybe Ilaje. If your revenue is over 50 million naira, then by law, you are no longer classified as a small business. And so what that means is that you have to pay are basically different. So going ahead, next slide. So what is a tax? What is tax rather? We've been talking about tax. Does anybody know what the definition of tax is? Does anybody want to help with that? What distinguishes tax from just any regular payments that we make?
I'm just going to guess and say it's because it's paid to the government.
So she made a very important point. But the most important thing that makes tax is that it has legal backing. That's the most important part. It is backed by law. And so what that means is that if a tax man comes to you and says, you owe so amount in tax, and you refuse to pay, you have committed a crime. As opposed to, which is, it's not that straightforward, right? But if you are convicted of failure to remit, you have committed a crime. So that is what makes tax, that it has legal basis. And so we can see here that the 1999 Constitution is a legal basis for tax in Nigeria, the Company Tax Act, the Personal Income Tax Act, the Value Added Tax Act, and Finance Act. So one of the key things that the fiscal policy reform did is that it consolidated all of these acts into one. So prior to 2026, we have so many tax acts. And so for us tax consultants in our day-to-day work, if you want to consider what the tax implications of a transaction is, sometimes you have to open up to 3, 4, 5 tax acts and start considering, okay, what does this one say? What does this say? What does this say? But now all of those tax acts have been consolidated into one, which is the Nigerian Tax Act. So what that means is if you want to know anything about the tax, you just have to go to one place and you can see all that you need to see about that. So the questionnaire that was deployed before the event, there were a couple of questions that were asked. And so some of those questions informed what our presentation is today. And so next slide, please. And so we discovered that a lot of people do not understand the distinction between the different tax authorities. As it is right now, we have the FIRS, and we have the general name, which is state IRS, but it includes like LIRS, we have OGIRS. This. As it is right now, the FIRS, the Federal Inland Revenue Service, is responsible for administering certain tax, such as corporate income tax, value-added tax, capital gains tax, while the state IRS, which is the SIRS, are responsible for personal income tax. So your pay as you earn, which is taken out of our salaries for those of us who work in corporates. It goes to the states, and it is determined by your state of residence. So it doesn't matter if I work in Lagos State. If I live in Ogun State and I come from Ogun State every day to Lagos, my payee must go to the Ogun State Internal Revenue Service. And so we have 37 distinction between the FIRS and the FCT-IRS. FCT is where the seat of power is. Well, the FCT-IRS is responsible for administering taxes like payee for people who reside in the FCT. So the way we pay certain taxes to the LIRS, people who reside in the FCT remit certain taxes to the FCT-IRS. And so something I found very interesting when I began working in taxes, did you know that for members of the Nigerian Armed Forces, they don't pay their tax to the states where they reside? So because of I don't know, but because of the nature of their work, they remit their own pay to the Federal Inland Revenue Service. So that's actually very interesting as well. And so it's important to know the distinction between these taxes so that when you have to remit, you don't remit a tax to the wrong authority. Or for example, if your business is a one-man business and the FIRS is writing to you, you will not be confused because you know that as a one-man business, since you are joint with your business, you should be remitting to your state's internal revenue service. So that is the distinction. And another interesting thing is that from 2026, we will no longer have FIRS as we know it. It will become the Nigeria Revenue Service. And the reason why they did this is because prior to now, we had some taxes that would go to the Customs Authority, Port Authority. You know, there were so many small bodies that collected taxes, and they worked with the FIRS. But then they thought, okay, why don't we bring all these bodies together? Why don't we consolidate them so that it's easier for them to work together? And so from 2026, when you start seeing NRS, don't be confused. It just simply stands for the Nigeria Revenue Service. So we're going to be looking at the impact of tax reforms on you as a small business owner. So we're going to be going through top changes to know. Top change 1 is that there is increased exemption threshold for small companies. Remember that we defined a small company as a company with annual revenue of less than 50 million naira. But prior to 2026, it used to be 25 million. It used to be, as at now anyway, it's 25 million. But from next year, it's 50 million. So what that means is that they have widened the classification of who we define as a small business. And one of the advantages of this is that before you as a business owner have to start running around thinking about CIT, CGT, all of those taxes, you are able to stabilize. Your business is able to, you're able to reinvest most of your profits into your business so that your business grows substantially before you have to start thinking about all of those taxes. So we have here that small companies are now exempt from companies' income tax, capital gains tax, and the newly introduced development levy. So this newly introduced development levy is taxed, is 4% of your profits. And so prior to 2026, what we have right now, we have certain levies like, how many of us went to public universities here? How many of us? So if you remember, there were certain buildings in universities that they will write TET fund on. Yes. So there's a TET, so those are some levies. Companies have to pay some of those taxes to do some of those development. They're basically development levies. So there were so many small ones of those levies. So all of those are going to be consolidated into the development levy. But fortunately for most of us in this room, I believe, we don't have to think about that because we are still considered small businesses. Okay, it says here that we already went over that. So if your annual turnover is less than 50 million and your fixed assets are not exceeding 250 million, you are qualified as a small business. But an interesting thing about the tax law is that professional services are not qualified as small businesses. Mr. Isaac, I'm sure he's not happy about that. So as long as you provide a professional service, you cannot qualify. That's actually a good way to look at it. As long as you provide professional services, and professional services include accounting, right? Who can give us other example of professional services in the room? Law, yes, legal services and all. They cannot be qualified as professional services. So going ahead, top change 2. Next slide, please. Yes, a more progressive income tax regime. So personal income tax is basically you pay as you earn. So for those of us that work in corporate, every month I get this email from LIRS and they will say, so amount has been remitted to the LIRS. Sometimes I will sit down, I will calculate that money times 12 and say, if this money entered my account, I can do so thing with it, but you have to pay that tax. It's a statutory requirement. And so now, the payment for personal income tax has been made more progressive. And so in secondary school, we remember when they used to talk about a progressive taxation system. So progressive taxation basically means that the rich pay more, and the less rich, I don't want to use the word poor, right? But the less rich pay less. And so if you look at the table on the slides, you can see here, I don't know if it's clear, but what it has there is band, and we have rates. So first 800,000 naira is taxed at 0%. Next 2.2 million is taxed at 15%. Next 9 million is taxed at 18%, and so on. So let me explain this in a way that makes it easy. If you earn 5 million naira per month, it doesn't automatically mean that because you fall, next 9 million, you pay 18%. That's not how it works. Of that 5 million naira, and they tax it at 0%. And so they do 5 million minus 800,000. You have 4.2 million. It is taxed at 15%. Why? Because it is not up to 9 million naira. If you earn more than 5 million, right? And so maybe you earn 10 million, and when you take out 800,000, you have 9.8. As long as it is less than 9 million, it will be taxed at 15%, and then the excess of that 9 million will be taxed at 18%. So that is how PIT is calculated. And we have a couple of tools. I ought to have put a QR code. So there are some free tools online that you can basically scan. It's a tax calculator. You put in how much your tax, how much you earn, and then it generates your tax. But of course, it's not as straightforward as this because there are so many deductions when it comes to personal income tax. So it's not as straightforward as, I earn so amount, so this is my tax. Some of the deductions we have include pension, NHF, National Housing Fund. Those are non-taxable. You don't charge tax on those things. Another example of deductions is rent relief. I don't know if any of us have heard about rent relief. The new tax law introduces rent relief. And what rent relief basically is it's capped at 500,000. But what that means is when you say, this is how much I earn, they will take out 500,000 from that money. Why? Because the government expects that you will pay rent. So they don't want to tax you on that rent amount, right? So they take out 500,000. As a receipt, an invoice, whatever it is that is available, request it. Because when it comes time for you to do your personal income tax, this will actually be required. And of course, another reason why they are doing this is because a lot of people pay rent underground and they don't pay tax on it. Some taxes due on rent, for example, withholding tax. Withholding tax on rent is 10%. What that means is that every time you pay rent to your landlord, you are actually 10% of that money. So if my rent is 10 million, I'm actually supposed to pay my landlord 4.5 million and take 5 million to the government. That's withholding tax, yes. But of course, it doesn't apply to you as an individual for corporate entities, but that's just an example. So now the government telling you that you must bring evidence of receipts. They want to know how much your landlord is earning so that he will not avoid tax. Do you understand? So all these things are all well tied together. Individuals earning 800,000 or less per annum will now be exempt from tax on their income and gains, while higher income earners will be taxed at a higher rate up to 25%. The Act also increases tax exemption thresholds for compensation for loss of employment or injury from 10 million to 50 million. So if for people who work with, structured organizations, if they have to lose their job because of injury or, basically when they lose their job, they usually get a compensation. And so this new tax act is increasing the threshold for tax exemption on that as well. So going back to our case study, Aisha Ibrahim, I'm sure you can already see that she ought to pay personal income tax, because personal income tax is compulsory. As long as you earn money, you need to file personal income tax. The question is it applicable? Because remember, as long as you're earning less than 800,000, it is not applicable. So the question is not, should I pay personal income tax? The question is personal income tax applicable to my situation? If you're an employer of labor, consider, is it? So top change 3 to no. Next slide, please. VAT at 0 rates on essential goods and services. Now, mind you, there are so many other things to know about the new tax law, but these are the key things that apply to small businesses. So permit me to go a bit technical. I'm sure you'd have heard the term VAT exempt. They say, this thing is VAT exempt. How many of us have heard that term before? But how many of us have heard about tax at 0%? I'm going to be honest with you. When I heard it the first time, so I was confused, because if it is exempt and it's 0%, why are they different? Well, it's actually very different when it comes to the technicality of it. If a particular service or good is VAT exempt, what that means is you don't charge VAT on it, but at the same time, you cannot charge impute VAT on it. Now, when you go to the supermarket to buy something, you will see they'll put there 7.5%, right? VAT is basically value-added tax. As long as anything you consume in Nigeria adds value to you, you must pay the government 7.5% on it. That's what the law says. So now look at it from the example of somebody who produces bread. I produce bread. I have to buy flour. I have to buy butter. I have to buy oil. But bread is VAT exempt because essential goods, food and essential goods like medical items, education, they are VAT exempt. So I produce bread. But maybe some of the things I use to produce my bread are not VAT exempt. For example, the nylon I use to package my bread is not an essential good. The paper that I print, maybe you say Abdurrahman and Son Enterprises. That paper, when you print on it, you pay VAT on it. But you're not telling me that when my bread gets to the final consumer does not pay VAT on that bread. So the VAT that I paid, where does it go to? What happens most times is that VAT gets added to the final cost of that bread. So the cost of bread then goes up. But what the new tax law is saying is that we're going to move it from VAT exempt to VAT at 0%. Now, this is the distinction. VAT at 0% means that you can claim impute tax. We did not have that before for most, especially for services. So what that means is that when I buy my bread, when I'm producing bread rather, and I buy nylon, I buy paper, and I pay VAT on it, by the time I'm presenting my books for tax services, I will tell them, I spent 1 million naira on nylon, no. I spent 500,000 on paper. Please help me to remove this. So what that means is that hopefully, prices of goods and services will come down by the time producers are able to claim VAT at 0% on essential goods and services. Yeah, so that's another change to know. So it's Amen. So it says here that the NTA expands the list of zero-rated items to include essential goods and services, such as basic food items, medical and pharmaceutical products, educational books and materials, electricity generation and transmission services, medical equipment and services, tuition fees, exports excluding oil and gas exports. The impact of this is that businesses selling these goods and services can recover their VAT costs despite the zero rate which was previously not possible by law. So I hope I didn't lose any of us on the explanation of zero-rated versus exempt. Okay. So top change 3. Top change 4, input VAT recovery. I think we already went over that. So VAT is still 7.5%, but now we have input VAT. So let's move on to the next one. VAT fiscalization rules. So we have a team here to make presentation on fiscalization, especially e-invoicing. So you know we're in the 21st century, everything is online now. And so the taxman has also come on board with that. And that is where fiscalization comes in. So what that means is that biro and paper is good, but there's a point your business will grow to that biro and paper will not be accepted. You know the point we are getting to in Nigeria? We're getting to a point whereby every transaction you make in your business, they can see it from their end. That's the point we're getting to. And when it gets to that point, you cannot lie to them. You cannot tell them that, oh, this is what I sold, when meanwhile, you cannot tell them you sold X when you sold Y, because they have seen it. And you know another interesting part is, there is a provision in the law which states that if a taxman comes to you and says, we have so software, we want to put it in your account, in your books, we want to put it in your maybe your computer, for example, and you tell them, no, I cannot allow you. An example somebody gave is that, imagine I produce Coca-Cola and I have a secret recipe, and I tell the taxman, you cannot come near my computer because there's a secret recipe in my computer. You are going to be fined. They will fine you, and it's not small money. You will be fined. So it's better for us to get in line with some of these things, so that by the time, because most of these are not yet applicable to small businesses. They are applicable to large businesses, but a point is coming where all of these will be applicable to small businesses. So it's better to have them in mind and build your business around this. So as much as possible, try to go digital and try to stay away from biro and paper. As it might be a good place to start, but you need to bear in mind that we're getting to a place where everything is going to be fiscalized and digitalized. So top change 7, increased penalties for non-compliance. Now this one is very interesting. So let me give an example. Imagine Total PLC. We all know Total, right? They're having their end of the year party. They now say, there's one Amala woman in maybe Obalende. Her Amala is so good. That's the Amala we want to eat though. We don't want to use a corporate entity. So they go to Iya Amira and tell her that we want you to come and cater Amala, this is our party. And she comes and the Amala is looking so sumptuous. But guess what? She's not registered for tax purposes. On the day of reckoning, when Total PLC has to present their books, do you know that they can be fined up to 5 million naira for doing business with an unregistered entity? Did you know that? So what that means is that as a small business owner, if you want to be attractive for large entities, it is better for you to be tax ready. Register for tax, get your tax identification number, and just be ready so that the day when they come and say, maybe, give me a big company. Give me any big company. Seplat. Maybe they say, Seplat is doing patio and they want somebody to come and deliver drinks. They'll not tell you that, okay, come and present a proposal. They now ask you, where is your tax identification number? You now start running helter-skelter. You don't want to be in that situation. So it is better to register and be ready for when such opportunities come. It says here that there has been a significant increase in non-compliance penalties and the introduction of new penalties. Some of the updates include increase in the penalty for failure to file returns to 100,000 in the first month and 50,000 every month of failure continues. Introduction of penalties such as penalty of 5 million naira for awarding contracts to individuals or entities that are not registered for tax. Penalties for failure to grant access for deployment. This is the example I was giving. That they come to you and say, there's this technology we want to give you to be looking at your books. And you say, I cannot allow you come near my records. There's a penalty for that as well. Right? If a tax officer comes to you and say, and maybe they serve you a paper, they come to your door and they knock, we have a paper for you. And say, from the FIRS, come on, get out of here. We don't want to see you. If you bounce them from your premises, guess what? There's penalty for that as well. So like Mr. Isaac said, if they write you, the best thing to do is, number one, be ready. And when they write you, just cooperate. Have your books in place and be ready to do the needful. Top change number 8. The FIRS is renamed to the Nigeria Revenue Service, and the state internal revenue services become autonomous. So I think we've gone over this as well, that going forward, the FIRS is going to become the NRS, and state authorities are going to become more autonomous. And so Mr. Isaac talked about top change number 9, I believe, which is the introduction of the Tax Ombuds Office. So who is the Ombudsman? The Ombudsman is I wanted to say is supposed to, but let's be objective. Is an independent entity who's supposed to come and fight for your rights. So now they come to you and say, we have looked at your books, so your liability is 10 million naira, and you don't agree. Maybe you don't have, because there's also something called the tax appeal tribunal, where you are supposed to go to if you're not okay with whatever liability has been apportioned to you. But now we have the tax ombudsman, and his job is to fight for you and say, okay, this person said you gave them this liability, and they don't agree with it. Okay, let's look at it objectively and see what ought to be. So that is also a very new, a very interesting addition to tax law. So that brings us to, that is a summary of the major changes for small businesses. And so we'll be going to essential do's and essential do's. Essential do number 1, maintain accurate records and file taxes electronically to ensure compliance. Like we said, we're going to a point where everything is going to be electronic. So it's better for you to already be in line with that, so that when the time comes, you will not be caught unaware. Formalize your operations, register business names, obtain your TIN, and integrate into the formal economy. So I know some of us may be wondering, like, what does it take to register for TIN? It's very simple. For most times, when you go and do your CAC registration, most times you already get your tax identification number. So it's as simple as that. And interestingly, Smedan is currently running free registration for, I think, 100,000 businesses. We try to get them here to register for people who are not registered, but the process is very simple, and we realized there was no need for that. So all you need to do is go online and check for Smedan free registration, and you'll be able to register your business for free. The scheme started in, I think, September, and it's still ongoing, so you may want to take advantage of that. Then join MSME associations. Come for events such as this. This is our first event, our pilot edition. We hope that by God's grace, if we have subsequent events, we're able to go deeper into the meats of what is actually being tax compliant. And so you can join associations so that you are able to learn from other people as well. Then leverage compliance for growth. Mr. Joseph talked about the fact that having good tax record is a very huge hack to growing your business, because if people want to invest in your business, they want to see what is your profit margin, what is your annual revenue, what is your turnover, and so being compliant really helps with that. So the way forward, small businesses must embrace tax reforms, leverage available incentives, and seek guidance for sustainable growth and compliance. You must understand the available incentive. There are so many incentives. We have tax holidays. We have pioneer status incentives. Those are more technical things, but those are some examples of things you can take advantage of to reduce your tax liability as a business owner. Then formalize your operations, register your business name, and obtain a tax identification number. Engage and consult with tax consultants whenever things become complex. In that way, you are able to take advantage of the reforms and grow your business sustainably. So if you have any questions, please jot your questions down. We're going to have someone talk to us about e-invoicing. That's the last session, a very short session. And then we're going to have an interactive session where people ask questions and we are able to answer. Thank you so much for having me today.
I hope we all enjoyed that session. So as part of this, I want to say movement, well, yeah, as part of this movement, we brought a company to come and talk about their product with us. So what they do is e-invoicing, and like we said, we all have to give out invoices when we make sales and all like that. So I'll be introducing the representative from Max Front to talk about their products. You're welcome, sir.
Okay. Good morning. Sorry, good afternoon. Right. So, my name is Eno Obonkobo. I'm a product manager at Maxfront Technologies, right? So, yes. So I think a lot of, in fact, I've learned a lot here. I'm not much of a financial person. I deal majorly in IT, right? Project management and product management in IT. I've worked with regulation and compliance softwares for the government, NEPRC, right? Host Comply, and some other ones like that. Right? So currently, at Max Front, something we are dipping our hands into now is this invoicing. Right? I think there are new regulations, right, regarding invoicing that requires businesses of a certain large businesses, small businesses, and different categorization of businesses to be able to register under the invoicing infrastructure, right? If I'm not basically. All right, so let me just go deep. Instead of talking about the financial aspects, which I don't know much of, right? I'll just go into the requirements for of the invoicing, right? Basically, what is required, how the IT solution will help you when it comes to invoicing and things like that. All right, so first of all, I'll first define what an invoice is. An invoice is not just using a computer or a software to generate an invoice, right? You can use a software to generate an invoice and print it out and give it to your customers, right? So that they can basically have data on it and make payments on that. But an invoice goes beyond that. There is a specific way that FIRS requires you to format or some specific amount of data that is required in your invoice that you generated, right? It's a standard that's been issued by FIRS, and e-invoicing solutions, what they will do is that it's to be inbuilt into the solution, right? The compliance will be inbuilt into the solution. So all you really need to do is go ahead and create your invoice. It will validate as required by FIRS, right? So you can't really proceed without the correct information, which is inbuilt in the system to prevent over-reporting, under-reporting, and errors in reporting generally, right? So that has been taken care of in an invoicing solution. Okay, so the invoice that is generated will be digitally stamped to your customers, right? It can happen. Okay, so it doesn't completely exempt the invoices that are printed out and given to your customers. It's just that before that is done, the invoice will be transmitted to FIRS for digital stamping. That will allow them to be able to track every single invoice that is issued in Nigeria so that they can accurately calculate value-added tax and other compliance things that will be considered. Okay, so I think we probably know why invoices is required or why it has become a necessity, or the benefits of it, I would say, right? Part of it is transparency. You want it to be that your records are easily accessible, neatly kept, and easily queryable. Queryable, I mean, you can just go to any system, put in a particular reference number, and the system will be able to validate that invoice and say, oh yeah, this invoice is validated, it has been stamped, this is a particular VAT that was calculated on this particular invoice. So there is record of it. Anybody that, if there is going to be any complaint or anything like that, they can easily just go to a system, put in the reference number, get the details of the invoice, and the entire details of the invoice will be there. If it's valid, it's there. If it was transmitted to the customer, it is there. If it was paid on, the details will be there. If there was an error in transmission or anything like that, that will also be visible on the details of that particular invoice, right? So the transparency part is there. The compliance, since the compliance will be inbuilt into the invoicing solution, then you don't really have to spend so much time making sure that you are complying with every single details that has been outlined in the FIRS invoicing infrastructure. That's already been inbuilt into the solution, so it's a little less burden on your own part, right? Because it's already there. By default, you are compliant if you are using an e-invoicing solution that is subscribed to this new e-invoicing, this merchant buyer solution that FIRS is working on. Right. So if part of the requirements for the e-invoicing, part of some of the requirements or some of the way the data will be structured is that they have introduced, maybe not newly introduced it, but made it more of a standard now, a requirement, something called HSN codes. Right? There's a way they categorize all goods and services globally with a certain amount, certain type of codes. Once the code is inputted into the system, it understands what category the product or services falls under. It also understands basically it's categorized and sub-categorized. It's very clear. The code is in the form of, like, let's say 23.1.1, which can refer to edible goods that have this particular description. The code is very explicit. There are a lot of them. But this is also inbuilt into the invoicing solution. So once there's a section on the, I'll show you. Wow, I forgot that there was a PowerPoint. I've gone far. All right, I'll show you later on. There is I think I captured it. There is a section on the platform that will allow you to upload. Basically, you're going to add, especially if you're a small business, maybe not this, especially if you're a small business, you can add each of your products and services that you offer to the system. It saves them in the system, and it categorizes them for you, right, with the codes and stuff. And also, the ones that are VAT exempt too is also categorized there by default. So I think, like the previous speaker was talking about, there's some goods that are VAT exempt. That's already pre-baked into the system. So once the good falls under that category, which will be determined using the HSN code, it will automatically calculate it as VAT exempt and things like that. All right. Okay. So yes, I think that is the general overview of e-invoicing. It's not much. It's just about generating electronic invoices, right? Transmitting it to FIRS for digital stamping. At least in Nigeria, the way it is done, you generate your invoice on your solution, you transmit it to FIRS for digital stamping, which is the really important stuff there. Then from there, it goes to your customers, whether it's a physical, through email, or depending on how you want to take your invoice to your customers. The important thing there is that it's going to be digitally stamped by FIRS, and all the details of the invoice are going to be validated. Right. All right. So I think there's some. So can you move? There is a slide showing you some of just a quick look on the UI of the platform. All right. Okay. So this is what I talked of before. There's going to be a section on the platform, right? We call the solution fetch, right? There's going to be a section on the platform that allows the small business, to be able to enter and store their products and services, all of it. It's categorized them based on the HSN code, right? It's categorize that for you. Yes. All right. So this other page here just shows you how the invoicing section looks like. That's it. That says create an invoice with Fetch. We designed a small framework that allows you to create your invoice on the system. You create an invoice inside the solution like this. So when you're creating the invoice, you select it's not big enough. I didn't do it well. Yeah, you can't see it well, yeah. Right, but what happens is that you create your invoice, you select all the fields there are as required by FIR, right? So it's pre-configured. All you need to just go ahead and select which ones apply to you, or which one applies to you and what you are sending to your customers. Then in your items, in the place where you select your items, you have already configured your products and services according to compliance and categories and the tax and everything. You just select it in your invoice. It does the calculation for you, total calculations, your tax on it, your balance and everything like that. And once you have created the invoice, then you can go ahead to transmit it to FIRS for digital stamping. If it succeeds, you get a notification that your invoice has gone through. it has been digitally stamped, and then there will be a request to ask you, do you want to send it to your customer now, or depending on what you want to do it next, print it out or transmit it, right? So this particular page here, right, confirm invoice validity, doesn't only apply to invoices that are sent. The entire merchant buyer solution is nationwide. The unique code for invoice is called the IRN, invoice reference number. That code is, as long as it's an invoice generated in Nigeria, you can verify it on any platform that is approved by FIRS. Right? There's a website currently, they call it MBS, Merchant Buyer Solution. All service providers in Nigeria that are buying into this invoice and stuff, they will need to go and register there. Once they register as either a system integrator or an access point provider. Right? So Markfront particularly were both system integrators and access point provider. The difference is a bit technical, but one of the APPs, access point provider, deal with transmitting the invoice to your customers. System integrators deal with integrating with your actual physical hardware that you're using for sales. So whether it's a point of sale terminal or something, making sure that the data structure there is compliant with our FIS regulations and things like that. But regardless of whichever one it is, if an invoice is generated in Nigeria, no matter the platform you're using, you will be able to verify its validity. So if you receive an invoice, an e-invoice from anywhere, you can come on the platform fetch and put in the IRN number there. It will tell you if source. You can just use the IRN number there to tell you if this particular invoice is valid or if it's not valid. If it's not valid, of course, you don't need to make any payment of that, I believe. I don't know the real legal stuff there. But if it's not valid, yeah. So that's basically it for the e-invoicing section. It's very, very short, but I think I have major things about it. Not much to say about that.
All right.
Thank you very much. Okay, because of time, we're supposed to. Tell me, it's fine, don't worry. So because of time, we're supposed to have like a panel session, but because of time, we'll not be able to have the panel session. So what we will do is the case study that we showed on the screen. We are going to provide answers to that case study and send to everyone via mail, WhatsApp, broadcast, or whichever means is possible. So we'll be rounding up now, but I have some questions here that people wrote down. So I would like for the answers to be brief, and I'll be directing it to some of the speakers that came to speak earlier on. All right, quickly. So I'll be directing this question to Mr. Isaac, right? Victory. Secondary mic. All right. So this person said, I underpay taxes, payee, because I've not done an update of the number of staff and increase in salaries in the last 3 years. What is the implication of this for me? And who is obliged to pay the pension remission, and at how many number of employees?
Okay. Implication of under remitting payee. Like, I think the first thing I would say is, and I quickly want to just say this in a way that makes everyone understand. So, as a business owner or as an individual, there is only one primary taxes you are paying. There's a tax you pay because you are a citizen, either as a business or as an individual, and that is called the income tax. Of course, they've layered something on it called the development levy as well, okay? So you are paying primarily those two taxes, income tax and the development levy, okay? That's what you pay. Now, there is another taxes, all the one they've been mentioned, VAT, PAYE, all of those things. You are not the one paying it. So every business here, you are a registered agent of the government. You are only, as an agent, as you know what an agent does, you are only helping the government to collect and give. Collect. It's not a tax to you. The only tax you are paying is your annual personal income tax or annual corporate income tax. So talking to this payee now, you are an agent. As an agent, every of your employee are supposed to pay their own annual income tax, which is their own personal income tax, right? But as we know, employer, you are collecting the money every month. If government waits till end of the year to collect this money, this tax, it will be OT law case. Because the man will tell you, I've spent the money since now, January salary. I don't spend them. So to make it easy for workers, 9-to-5 workers, people who earn salary earners, to pay their own income tax, a scheme called Pay As You Earn was designed. Now, the employer, which is your own business, right, has now been appointed as an agent to help collect that money from the employee and remit it at the end of month to the government. Do you understand that? Now, if you've been under remitting, and that's why we talk about bookkeeping every time. If you've been running a proper payroll every month, if somebody's salary has increased, there'll be changes in the tax as well. You would have done it, so you will know how much to pay. So my advice to you, go through your record from the beginning, compute the taxes that is payable to date. Now, minus all you have paid so far, and you have a balance, then just go ahead and remit. In terms of pension, by the pension law, if you are a business, if you don't have up to 15 staff, you are exempted from complying with the pension requirements. Okay? What it means is that pension requirement in Nigeria is contributory. An employer contributes 10%, the employee contributes 8%. But if you are an employer with less than 15 staff, right, you can choose, not that you may not do it. You can choose to do it, you can choose not to do it. So it's really up to you. I hope I've answered all the questions.
Thank you very much, sir. All right, so we'll be going over the questions quickly because of time. And the question here says, is the tax ombudsman an employee of the NRS or SIRS or a separate body? So the tax ombudsman is an independent body because, of course, your lawyer cannot be your judge and your judge cannot be your lawyer. So it has to be an independent agent of the government. So the next question here is, what is the duration before remitting tax, which is payee, CIT, etc. The deadline before it will be declared as late. So all taxes have specific timelines guiding them. For example, VAT must be remitted on or before the 21st of the following month. Payee must be remitted on or before the 10th of the following month. For CIT, that is more of a yearly tax requirement. So it depends on when your tax year ends, right? So depending on your book, you know, okay, this is when my tax year ends. This is when I ought to remit social tax, but it must be done on a yearly basis. So what is the difference between TIN and payee tax ID? So the TIN is basically tax identification number. But then different states have their own ID. So for example, there is a Lagos State payer ID. There is the River State payer ID. So for some of our clients, for example, they have multiple tax identification numbers. They have a number for the federal, which is TIN. They have LIRS ID. They have River State ID. But going forward, that is one of the things that the tax reform will address. There will be a central number by which your business will be identified. So another question, it says, what is the best app to use for small business owners? For bookkeeping, because Mr. Isaac here is a representative, right? I think he's a Zoho, sir, can you clarify? Okay. So, but if you need clarity on a tax, on an app you can use, you can please reach out to Mr. Isaac. And like he said, he put a QR code. We will compile all of these resources and share with everybody as well. Then for e-invoicing, we have a question here that's apps for e-invoicing. Max Front Technologies, their representatives are here. They have a software that addresses e-invoicing. And then there are a couple of other approved softwares that can be used. So we will also compile these and share with everyone. So another question here is, I need more clarity on VAT at 0%. You explained that if they have already paid VAT for nylons, etc., they could point it out to the government. My question is it for a refund or so they don't have to pay tax on that expense again? So what that means is that you already paid VAT on an item that you cannot collect VAT on. The government will make allowance for that. So when they are computing how much you ought to pay at the end of your fiscal year, they make allowance for that. So it is now like a deductible. I think that's the best way I can. It is a refund, right? This is a refund, but instead of them giving you the money in hard cash, they basically refund it from what you ought to pay. So that is the best way to explain that. So it reduces your liability. So is there a session for the legal aspect and implication of the new tax laws for MSMs? We actually have a legal practitioner in the house, and she ought to come up, but because of time, we will not be able to take her session. But what we will do is we will compile, like I said, we will compile key information that will address this and share. And subsequently, perhaps we will have another edition. And I want to enjoin us. For the next edition, please, let's try to come early because we have a hard stop at 1 p.m., although we have extended to 1:15. So next time, we're able to make maximum use of the time that we have booked. So another question. Okay. In the event where an employee has been underpaying their payee tax because of how the company they work for operates, if the employee leaves to another company, how does the employee reconcile the difference he or she has not been paying? Now, this brings to mind a very important aspect. There's what we call a tax clearance certificate. I don't know how many of us are aware of that. So your tax clearance certificate is basically a certificate that the federal government, which is the state in Nigeria, gives you declaring that this citizen has been compliant with their taxes. And this TCC is required for a lot of things. For example, in the prior tax regime, it is required when you want to buy property in the official sense, you need to present your tax clearance certificate. For example, there are some visas you apply for. You need to present your tax certificate. So many things. There are some loans you want to apply for. You need to present your tax clearance certificate. So if you work for an organization and they have been remitting for you, by the time, like I said, for me, for example, I get an email every month saying your employer has remitted this amount. By the time I have paid my tax for 3 years, I get my TCC. Now, in a case where your employer has not been remitting accordingly, so it makes it a little bit kind of complicated. But as long as they have been remitting, because payee is not your liability as an individual, it is the responsibility of your employer. It is a responsibility of your employer, not your own, especially when you work for a corporate organization. So what that means is that by the time you've paid for 3 years, you can actually present the proof and you can get your TCC and make a reconciliation. So, another question, if you've registered your business and you have not started the business yet, will the business be taxed? And has the business owner committed a crime? So when it comes to registration for tax purposes, okay, I see Mr. Isaac smiling. I think he would like to take this question. He says, if you've registered your business and have not started the business yet, will the business be taxed? And has the business owner committed a crime?
Okay, so if you have not started your business, I think I'll just give you a guide first. Every time a business is registered and you've not started, you're expected to register for tax normally. Again, like you even need to get your tax identification number. If not, they can't open a bank account for you, right? And like she mentioned when she was speaking, when you register your business, now there's a thing that they give you. But I want to beg you, just to clarify, that does not automatically mean you have been registered, please. Because you have a tin from CAC doesn't mean you have been registered. So you have to actually physically go and register or use the tax pro max if it's limited. There's a way you can register online, right? If not, go physically to go and register. But my point is, if you've registered your business with CAC and have not started, write the FIRS or the LIRS that I have registered a new business, but I have not started. When you're filling your registration form, there's a place they will put what we call commencement date. So you put not yet started. And the day you start, you also write to them and say, now I have started and my commencement is this date. That date is very critical to calculating your first profit as a business. So just notify the tax office. If you have not done it now, write to them and say, I'm registered, but I've not started operations. And that does it.
Thank you very much, sir. And so we won't be able to take the other questions because of time, but we will, if you would like your question answered now, you can walk up to any of us, and if we're able to, we will answer after the event. So this brings our event to a close. We want to thank you so much for making the time to be here. We know it's not easy. Having worked Monday to Friday, leaving your house on a Saturday to come out is not easy. We really appreciate your support. And we hope that we have been able to make impact and answer some of the questions that you have today. Thank you very much. On behalf of the team, thank you very much, and enjoy the rest of your day. Thank you.